Netflix acting brave this morning. Good morning, retail traders. I'm here. I'm here. I'm here. Intel is up $12. Ooh, look at Intel today, acting tough. Got under 100. Didn't like it there too long. There's a bat. Had some kind of news this morning. A bat just sounds like a badass name. Bat ass. A bat. Badass. We don't think you're that funny, James. Marvell. I thought it was hilarious. Those are the 10%ers. Okay. Marvell. Nice little bounce off yesterday. Friday. Tesla's up today. I hope we had a great weekend. Doodly-doo. Figure out what I'm going to eat. I already know. AMD at it again. It's when you just can't turn your head on. Drink me some coffee. Yeah. That's how you do it. That's how you do it. Joey's under $10. Mister had a good pullback last week. That was going to be one of my... Oh, look at it today. I knew it. I knew it. I just knew it. I remember you calling it out, James. Yep, I sure did. MSTR. Yep, I did it. I tried to tell everybody. Didn't I? Yep, I sure did. Take off my shoes. We'll pull back here on Mister right now. 3 white soldiers right when I come in here. Had one of them Tubits, Phoebus, Forbus. 5. 5 of them today. 1, 2, 3, 4, 5. Ugh. How can you get away with that? 5 of them. It's disgusting. I tried to tell him. I did. And I tried to tell him, I tried to warn him about Bill Gates. Yeah, he's a weirdo. Microsoft. And it's down $4 today. Then we got Meta. Meta says, come by me, Jimmy. I'm under $600, Jimmy. That's Meta. And the winner out of all these magnificence is definitely going to be Tesla and NVIDIA. We already know that. That's a no-brainer. Then Apple comes in 3rd place. And then maybe Meta. Yeah. Microsoft is the last. The very last. Not saying it can be the very first. But when I'm drinking my coffee in the morning, I don't think about it. Something like this. I want to make a statement. For some reason, I have a line up here. And I can't figure out what the statement would be. I don't know. I really don't know. It's a solid support, I know that, but there's no price on it. And I'm torn is the word I'm looking for. It's a good word, James. So what we're going to do, I hate to say it, but goodbye. We're going to clear the list. Oh, God. What did it reveal? Ladies and gentlemen, we are now squeezing between the 21 EMA and the 9, which is above the 21, which with my strategy tells me that the stock is bullish, and we're looking at the IWM. I see what you're saying. We're squeezing, not saying we can pull back. If we did, low, it would be 281. And we're going to come up here and we're going to get the price line. Just as I did right there. I'm going to put it in. That ain't the price line. That's not the price line. We had a misunderstanding here. Now we've got a major misunderstanding. See what I don't like? Is when you don't have it set up perfect, your drawing, and you go to do it your first time, and it's never the same as when you go back and do it your second time. So I'd rather have everything all set up, and I got to second guess everything. $281.58. No, I'm not completely 100% satisfied with that number. So what we're going to do is we're going to go to the 4 hour. If you have a problem with that, let me know. Oh. Shit. I got a problem with it. If I look at the 4 hour, we're at resistance on the IWM. Because what was support now becomes resistance. So that could be an issue. Yeah. I think so. Right now we're pulling back to support on the SPX. So if it wants Jimmy to go have lunch, it'll say, Jimmy, can I have lunch? Or it'll tell me to take off my shoes and watch this next 5 minutes. Then go have lunch. Which I think I'll go with plan B. And I'll be pulling up my platform and drinking a cup of coffee. That's how you do it. That's what I tried to tell him. Oh. You got his puts filled? I have a bear in here. We have 2 bears in here, really. Johnny's one, too. Watch him. That's what they said. I tried to tell them not to. Comes. We're about to find out. We're about to find out. He's about to find out. He's doing the lotto. Look at him. He's impressed. They're 1180. They're at the 63 right now. We're going to find out what's going to happen here. We're at the 63. Jim looked like he was at resistance on the IWM also. It's also pulled back. Oh boy.
Moving averages, a different picture now. The price is below all four of them. They're all trending downward. They're all diverging apart from each other. So if you had more of a bullish outlook, you would start to look for price to break above not only our trend line, but above our 5-day EMA.
Verging apart.
Potentially near 262. And for those moving averages to start trending upward, the slope to change, for them to start converging back toward each other here for early signs of potential trend improvement. RSI has also moved lower. We are below our green trend line that's been broken here, but we remain above the oversold area, which is that threshold of 30. Typically, it signifies downside strength to come in a trending market if it were to be breached. So in this case,
our nice job on the puts.
Shows a much smaller node at these lows, near about 267 to 276. We had a much larger block of activity, lining up mostly with this range that we saw here between about 287 to 326 or so. The point of control all the way up here at those highs near 323 from this range-bound area.
All right, and right now we're only about $10 off of the 52-week lows, or the equivalent of about 4% here when we look at Constellation Energy. But Joe, thanks for being with us today. I also want to thank Rick Ducat, our lead market technician, for breaking all of that down for us today for the big three. That was Joe Teague as well. Coming up, we are going to spotlight the recent stacks data from Charles Schwab, talk about what traders were doing in the month of May, what stocks they were looking at, and how they're positioning themselves. We have all of those details when Trading 360 returns.
I have a question for you.
Sure.
You got a question?
When did Dad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Here they are right here. We're at the 200.
This place is incredible. It's where I get all your office supplies.
SPX.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place.
We're looking at the 7470s here at $5. The 7470s at $5 right here, off the 200. Crowd's going wild at the sports arena. We have the 200 right here. EMA. They're $5. 200 EMA. I tried to tell him that this was a very important support level. We have the 100 right here. Yep. We'll put it in smaller print. Oh, no. That was not supposed to happen right there. You can't make peace with these Iridians. They're a bunch of savages. We're at the coming close to the VWAP on the /ES. Prepare ye in the name of the Lord. Do we have any Iranians in here? I know you're not a bunch of savages. I swear. Oh, this can get down to the 200. It can today. It can. So Jimmy will wait. I want to see if I can get one good trade in today. And bring it on down for Muse. Holding the last one. Can you believe that? Can you believe what you just did there? One more filled at $2,100. Woo! Oh my God. Whoa. Yes. As I drink a little bit of sip of coffee and wait for my next position. Oh, that tastes good. Now we got all kinds of little different spots from right there to right there. We've just hit the first one. Second, third, fourth, fifth. One-em, two-bits, Phoebus, Forbus, and Phoebe. One bis, Tubits, Freebie, Forbes, and Phoebe. Jim, my little 3rd-year-old, she, for the first time, actually picked up her ears when you said Phoebus. I've never seen my little girl ever react to anybody like that before. And it's called Dog Talk. One bits, 2 bits, and a freebie would be the number 3. As we go, a 1 bits, 2 bits, and a freebie over here off the VWAP. And I said we're going to go down there and come close to it. Well, I didn't say come close, but I had it on my eye. The 7470s are now at $5. Washboardjim's debating on if he should take the trade or if he should wait. I think he had his chance to get it at a good 5. Yeah, I did, because it went to 480. I could have got a double bottom at 480 with 3-headed snake. Interesting. Very interesting. That would have been it. Look there, $5 to $5.90. I think I would have got out of it right there. Yep, I would have sold it. As we hit the 21, $6. Bam! 620 for sure. Jim, I want to thank you for that there call you made off the VWAP using the /ES combination, trading the SPX. That was a pretty trade. And it did. It bounced on down there and did a double bottom off that right shoulder with a triple bottom off the VWAP on the /ES. And, well, I hate to tell you, Jimmy, but it's up almost $200 contract as you just sit there and watch it run up. $200. $200. 7470s. Just like that. What do you got to say for yourself? Well, that's how it was planned to go, but I didn't get in the trade, sorry to say. I was enjoying my coffee too much. I'll wait for the pullback. Where's it going to be the pullback? Well, you got a triple top breakout here. It's called a yin yang. See it? Oh, I do. I do. So you're going to put your yin yang, oh, right above the 21. They're now at $5.70. So this here new support line, if it'll let me have what I want. You gotta look at the clock. It's important. It's important you look at the clock every trade you take. Jim, will you draw a trend line on the double bottom there on the slash? Yes. Yep. I'll do it. And put it right there. Oh, that's almost straight across, baby. It is, you know, we're just going to do it. We're just going to go straight across with it. I thought you would. It's not 100%, but we're going to make it 100%. Ooh, look at that. Woo! 74, 43, 53. This one girl at the IRS had her thermostat set at 7777. I said, God, can I take you to Vegas with me? 7777. Okay, I got a little sick there. As we get ready to break out, does anybody want to give me any presents? Like my vacation? Yeah. I'm waiting for the first one to volunteer. Woo! That's a good one. We're at the pivot point area. If it's going to bounce, it's going to do it right here. 74.70s are now at $5.70. I tried to hint with a 777777. Now, as I've hinted to you, I'll be taking off my shoes, starting with the left foot. I expect you to break out to 777. Seven, 7, please. Oh. Oh, I'm talking about the, oh, yes, the 74.70s. I want to see $7.77. So they're at 570. Now they're at 650. Does anybody have anything to say? How'd you do it? Because you're up $7, $70 from 570 to 680. Come on, keep going. We would like to see 777. What's the next resistance level, James? It'll be the 50 SMA. What's the next support? Be the 63 on the 1 minute time frame, please. Using both /ES and the SPX. Soon I'll be walking into the kitchen and having a smorgasbord on some of my best chicken noodle soup. Or, excuse me, chicken soup. It'll be just straight chicken soup this time. There'll be no cheese chips, no bread, no nothing. They don't have anything. It'll just be a can of soup. Homemade. Oh, there it is. $7.20. Now, you can make a business decision here, or you can see if we're going to break a little bit higher and get to 77777. Now, if you're a rookie, it would be nice to see you take profit. and then say, I can't believe he called these 3 white soldiers out. And there's my 7777. There it is. Oh. Thank you very much. For I am the god of the SPX. We just hit 77777. Are you impressed? Someone say yes. Say it with an A+. Please? Someone say it with an A+. I will. I will. Thank you very much. Who is it? Who gave me that grade? Well, thank you there, Washboard. Kumbaya, my Lord. I can't believe he called that out just like that. Now what's it doing? Well, it's sitting on the 63. It's trying to make up its decision if it wants to stay bullish right here. It's looking at the clock. Right now it's at 11:49 Eastern time. We just now went below the 63. That was very important. We have one and last and final resort that it holds the 21 EMA for your final entry. There we have a good drop. Will I be buying here? I think so. Because I hit my target to the penny. Get ready. Prepare ye in the name of the Lord. Prepare you. These are the 74.70s at $5 and something. 560, 540. Oh, no. It's already jumped up. I gotta snatch him up before it's too late. I'm gonna try it right here. Get shoulder line. Then we'll come back down. So you got a shoulder line right here. See it? So we want this to come down just a little bit and get this cheaper. Then come back up and break that shoulder line. And come back down and boom! That's what we want. $5.70. Now I could buy one right now at $5.70. I could have. And I would have sold them at $6.30. Now I come in and do the same thing again until I did it 20 times. Oh. Oh my gosh. We got a snake and a breakout. Pull back to double bottom. That ain't no doubt. The slash ES has already had its third trip to the VWAP. It's got one more chance. Let's give it what it wants. 74.70s. At 490. I think I'm gonna give it another shot. 1, 2, 3. Off the 21 EMA. Boom, boom, my. $74.70s at 390, 380. And we're at the 200 right now with 3 black crows. Three black crows ain't been what they used to be, but they're going to be right here. And we want to keep this body above this one right here and start to move up. So these are the 74.70s at $3.90. The crowd's going wild at the sports arena. Washboardjim hasn't had nothing to eat in 3 days. SPX, calls, scalping, lotto, and these are 3 black crows. Strike is the 74.70s at $3.90. And this is going to be the 3 black crows pattern. Number 3, and you're going to type in black with a capital B, and not be called a racist for it. 3 black crows. Now you might be called a racist because you called him a crow. Oh. Right then, right when you said it too, it dipped on you. That was the racist thing to do. Well, I bought it off the 200 EMA. Three black crows, back crows, three black crows. Damn, Jimmy. Should have had it on there, Jamie. But you didn't. That's a harmony. You don't get your second chance. You get a second chance. $3.40. Can you give me $3.20? The crowd's going wild here at the sports arena at $3.20. There it is, right there. You don't want this to dip below this line. You really don't. Well, you don't want to drip below the line. Here we go again. Here we go this time. Don't dip below the line. Cross and pick it up. Break out this time. Don't break the line. Don't commit any crime. Pass a cigarette, please, and a Valium, Nancy. Well, things ain't looking too good, but you do have a higher low. So don't lose faith yet, Jimmy. I think I got another chance. Promise, baby, I won't get in your pants. Not on the first date. Well, I wanted to piggyback the 9 EMA. I'm about even again. Oh, I am. Jim, should you sell while you're up? No, not yet. If I break the 9, now see, I'm bearish because I'm under the 9. And these things were, damn, 330s when I got them. At 390 and 330. And they went to $3. And now we're at 410. So I'm up almost $300. Now I can make a business. I am up $300. So I make a business decision here. Should I sell this trade if I'm green? It's the prettiest thing I've ever seen. Can you break out the dip on this. Oh, I got an A plus. Who gave me the A plus? Who gave me that A plus? Mark, thank you. Well, you gotta play when you talk. Well, when you feel like you're up and you're up. We're at 370 right now. You made it above the 9, but you lasted less than 2 minutes. Well, you're up. Most men don't last that long. Ain't that right, Magnificent? Woo! Woo! You're at $3.50, $3.60. Have you ever thought about selling? No. Well, if you get back up to 330 again, 430, you get out now with $70 profit. Come on, Jimmy. There's $4, $4.10. Well, it's time you sold these incredible options. Your first few you bought at $3.90 and you decided to double down. $3.90 and $3.30. Do it twice. Walk away. Say it's okay. Don't take no one else's advice. That's an incredible shot, James. You just taught me a valuable lesson there. Take profit when you can. Yes, I bought them at $3.30 and I sold them at $4.20. And I bought them at $3.40 and sold them at $4.10. Thank you, Jamie. I think I'm gonna go get my soup warmed up because I don't think the day's over yet. It's now 12 o'clock Eastern time, at post 8 minutes. You might get your chance right here. $3.10, $3.30. It's not give up yet, but it's got to make up its mind here soon. And I'll tell you that much. So I'm thinking it's got a little bit more in it. It don't look like that. Well, we'll find out here shortly, won't we? Yes, we will. $3 right there. Pick it up, $3. And might even move them up even to the 74.60s at $5. $74.60s at $5. I tried to tell you. God damn, Jim, they're almost up $100 already. They're about up $100 already. Should I take my money and run? $5, 74.60. Woo! Having fun. Look at that, folks. $3 to $4. Well, it's going to make up its mind. It needs to really do it now, because we could play around for another hour. So, hour and 40 minutes. Let's do something. Break it or sell it. If you bought it at 3 down there. Well, you're up $60 a contract if you bought it at 3. You can turn around and sell it with me. Just takes one ticker out of all these thousands. Well, it's about time. Waiting too long. Decided to write another song. We started at 3. If you're trading with me, we're at 5. Oh, shit, look at there. We're up $150 contract. I think we're going to break. See, after a certain time, you get this fever. That's what I'm going to call it, fever. Like, okay. Now, I've counted to 3, and you weren't there for me. I counted to 4, and I wanted to make notes a little bit more. And I'm starting to get a little pissed off. You're making me count to 5. And I know the rules. If I break 3, I mean, we're close. But if I'm getting up there to 5, man, I should have learned my lesson a long time ago. Cause we might take a nosedive. You can only keep going on for so long. Follow with me. Let's make this break out to liberty. It takes a Trump tweet to talk about peace. I jumped in at 3, and I sold it at 4. Made $100 a contract. But I just want a little bit more. So I hang on to a couple of these. See how long I can twist it. I got some respect. Let's break the distance. These things are 440 right now, folks. 450. Now it's getting low. My fingers are starting to bleed. It's not because of the calluses. I'm breaking out. I need to take some profit. Do you know anybody that makes $160 times 6 in a matter of minutes? I wasn't scared. I wasn't scared because I saw my 3 black crows. And I usually know what happens after them. A double bottom came in, rubbed me on my chinny chin chin. 3 black crows. Yeah, man, you sound like a Tom Petty. No, I sound more like a Bob Dylan. Well, I gotta do double bottom. It's easy to say. A double bottom for you and me. Got a double bottom out of snake. Jim, it was much more than that. If you go back a little bit farther and look at your notes, and you'll say, if you can count to 4, you just might make a little bit more. If you can count to 4, you just might make a little bit more. That you're in your sweet spot. 1, 2, 3. And you can trade with me. You're at 460 now. You're almost up $200 contract. One more. Oh! One more. Can we get 5? There it is. Just a glimpse. Just a microscopic glimpse of the 5. You can do it. It was just a little glimpse. It's coming. It's on its way. Here it comes. Oh! Well, let's look around for us. Oh, there it is. 5. You got 5. Take profit. Now, please. Let's not. Oh. Shit! Woo! That's her. Girl of my dreams. Britney Spears. Did you just see what just happened right there? We just hit $5 a contract from 3. Now, who didn't take that trade? That's an insult to my integrity. Who paper traded it? Uh-huh. That's what I thought. Well, there's a girl down the street. She's the prettiest girl you'd ever want to meet. There we go. Very nice. She's kind of like this here, IWM. You know, it just keeps going back and forth, really can't make up its mind. Well, it's going to have to do something real soon, because it's getting old. Jim called for a knife. He always gets what he wants. I'm looking at the SPX as it dips right here for me. Here we go, right back down and see. It's doing exactly what I wanted it to do. Right here. $3.20. Should I take it? I think I should. I can always add if it hits the 200. That'd be your last resort. So these are the 7470s at $3.20. Crowd's going wild here at the sports arena. I'm scalping the lotto, pretty mama. I think you know what to do. You need to make that decision and break out. And we all can have a merry old good time. $3.30, $3.20. Oh yeah. Oh, $3.60. I think you're doing what you need to do here. $3.60. He's doing it. Can we have peace, please, this week? And Jim get a big breakout. The crowd's going wild here at the sports arena. We're at 3. You're up, Jim. You're up 6. Oh, God damn, she's beautiful. I don't think you understand. Britney Spears, I love you, dears. Let's go out back and chop some wood. We've got the barn, we got the yard. Let's do what we could. Well, I bought these contracts at $3.20 for my good woman, Britney Spears. I mean, really, don't she look charming? Dressed up in her little country outfit. Let's do it. Uh-oh. We're back to 310. We need to really hold this spring here. Well, this is my last choice here. We can't be going much lower than this. Reverse. Needs to really hold right here. Very bad. Yeah. Do it. I'm not giving up yet. Oh. Move it. I'm still waiting. Well, Apple's getting real close. About made its mind up. I've made mine, I'm making lunch. Come on, baby. You can't fail on me here. So I can drop more. Just watch me. That's how you do it. Not like that. He's not giving up yet. And they're at 210. I'm still in the game. 215. Question is there any cleavage today? Nvidia's got a triple bottom. And the Head and Shoulders. Apple's at the 200. And we're still flirting with the bottom here. Well, still got a chance. It's got to happen here because we're at the neckline, the snake. God, that's good. Yum, 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 yum. My chicken soup. Just the taste. I mean, I could drink that and be happy. The broth. We're now at $230. I'm down $90 contract. Well, that's good. Nice dip by. Oh, I know what I'm doing. The 60s. Something going to happen here. Squeezing. Come on, baby. Come on. Ooh. I think it's time. I think it is. Come on. Well, you talk about a wait out. And then they shove me one of these. See, you're not supposed to do that. We have a problem. Yep, we do. Yeah, I just squeezed up that way. Oh. Whoa. Oh. I have no clue what that is. Mm, 7450s. Pretty nasty. I mean, damn. I'd like to hear SPY.
This name, in the case of Micron, over the last 3 months, has basically a 0.9 correlation to the S&P 500, which means generally they're moving in the same direction way more often than not. But the S&P 500 trades with an 18-19 volatility, which means over the course of a year,
Huge.
sort of the general expectation for movement is about 18 or 19% for the entire year. Well, for this stock, it's 110%. That's what, 5.5 times more volatility. So if you're looking at today, for example, Micron is up 9.7%. The S&P 500 is up 0.5%. From a trading standpoint, there's just way more volatility in a name like Micron that's generally moving in the same direction as the overall market. That if you think the overall market was going to bounce back today, I mean, logic says you'd get paid more to own Micron than the overall market if you were right in your assessment.
Yeah, that's a very good point. I think that's why you see this continued appetite for some of these, say, more volatile, but also, I mean, it's been accretive to be on the right side of things here with Micron being just such an outperformer. But it does feel like right now we're so concentrated in these areas that are propping up the market, which I guess is not really anything new, as the breadth has been, I think, pretty consistently.
And I think Friday is an example of what happens when that trade sees a little bit of an exit. It is crowded, and if a lot of people are running towards that exit at the same time, it can get really ugly really quickly. So there's your risk, but more often than not, if you generally believe in the trajectory of this AI infrastructure trade and this AI driven bull market, where have you been better off being? In those names or in the overall market? Both have been fine, but I think one's been clearly a lot better.
Yeah, and I mean, we're even comparing just like, tech themes, but even like, I would say that this is why tech is so notable, even outside of like, discretionary staples. I mean, you have heavy growth tied to everything right now with memory and memory storage, which speaks to actually our next name today, which is SanDisk, which is back on the rise again today after we did see two firms hike their price forecasts for the memory supplier. Mizuho was one reiterating an outperform rating, lifting its price tag to now $2,200 a share from roughly $1,825. But B of A also followed suit later this morning, maintaining its buy rating, raising its price target to $2,100 a share from just over $1,500. So we did see this is definitely aiding to recover that 11% drop back on Friday. Prior to some of the movement we saw Friday, the name had risen about just over 3,600% in the last 12 months as of even Friday's close. So AI has spurred this obviously historic demand for memory, resulting in skyrocketing prices and wider margins. But the question for investors is when supply may catch up to demand and bring price growth now just back down to earth. And Mizuho's answer was basically not soon. They estimated that starts for NAND flash wafers, which are very much the building blocks of SanDisk's products, will decline now in 2026, but then rise slightly in 27 with no significant supply online until 2028. Demand, though, will continue to grow at what they expect to be an 18% annual clip this year and next. And pricing, as a result of this, should continue to be strong, is what B of A said. They are increasingly signing these multi-year agreements with customers and also fixed pricing for this trading period and then variable pricing through the rest of this deal. And so over 1/3 of their estimated now fiscal 2027 revenue is from these so-called new business models, or NBMs. And so that was called out specifically by B of A. They did say that these contracts are designed so that they remain in guidance range, even if pricing is at a floor. But over time, they see a path to higher proportion of supply under these NBMs with hopefully some more stability to their earnings. So this is encouraging because it's not just a SanDisk specific story today. We're also seeing, like Western Digital, Seagate, a lot of these names tied to the similar themes are also doing quite well today.
Yeah, I mean, this stock's super volatile, just like Micron, very similar correlation. So a lot of the same things apply. It's a smaller company by market cap. And both these names kind of ran up into their 1 week EMAs intraday today and failed near those levels. So we'll see if it can reestablish the short-term trend. Long-term, clearly the trends are still intact. Even medium-term, very bullish trend. But short-term, you could make the case a little bit of technical damage done last week.
Yeah, absolutely, especially when, again, you are as volatile as this name can be. It makes big swings on even just a day-by-day basis. Today, no exception, up now roughly 600% this year. So a story that has been one of note, of course. Now, our next name today, lesser discussed, but still also a name that has been on a run, that is Corning, which is up now about 5 3/4%. Following some news that Amazon and Corning announced this multi-year, multi-billion-dollar agreement to produce optical fiber for data centers. So as part of this deal, Amazon will make investments to expand Corning's manufacturing sites across North Carolina, as well as creating roughly 1,000 jobs at these facilities. But these efforts are designed to strengthen the U.S. supply chain for fiber, cable, and other connectivity solutions that are part of Amazon's broader data center build, although financial details were not disclosed explicitly. But the companies will also be working to expand Corning's training programs for fiber optic technicians at various places within North Carolina, so all within the same area. But the program, they said, will be very much increasing this talent pool to more of these high-paying technical roles. We did also see other names that are in the optical networking hardware space also getting a boost. We saw Coherent rise this morning, as well as Momentum rising a bit more modestly. But the Amazon deal does come just months after Corning did unveil this multi-year agreement worth roughly $6 billion to build data centers for Amazon's rival Meta platform. So Corning has been very much busy. This does, though, make also, I'd say, equal sense for Amazon, because the company did just break ground on this $10 billion data center campus in Richmond County, North Carolina last month. But again, it does go to show that a name like Corning that was for so long so heavily tied to Apple, because they were the glass manufacturer and really the primary third-party really provider that Amazon was tapping, or Apple, excuse me. Now they've really expanded the data center and like fiber optics specifically, which I think has made this story just so interesting.
Yeah, it really has. And when you look at the response, clearly about an $8 billion market cap rally. The street thinking that there is a significant amount of revenue associated with this, but also just the importance of expanding the partnership with a hyperscaler. Mm-hmm. I don't know if it's net positive ultimately for Amazon. It certainly is. That stock's under pressure today. You look at what Alphabet did last week with raising capital. Meta's talking about that. Both those stocks under pressure. The street isn't necessarily rewarding the names spending the money at the moment right now. But if you're a company that's just collecting those revenues from these hyperscalers, it's a good place to be.
It is definitely a good place to be, and this name has also been fairly impressive in that regard. But our last name today is actually not a tech player. That is Eli Lilly, which did see some positive developments from its weight loss trial for various treatments of weight loss, but also like the benefits are just so amazing to read about, as we did see that they reported specifically with overweight or obese female patients, they were able to reduce their body weight throughout all menopausal phases while still using the maximum dose of their Foundayo medication in 2 medical trials. So the first trial did show that these individuals dropped a maximum of 28 pounds over 72 weeks. During the second study that was focused on those with type 2 diabetes, patients in the same 3 psychological stages did shed up to, significant amounts of weight. They did say on average it's like 28% of your body weight over a 70 to 80 week span. But this was definitely encouraging, especially when they were able to see not only is this able to effectively treat other things like diabetes, weight loss, but sleep apnea, as well as osteoporosis. We are seeing like various advancements that these drugs are at least attempting to help treat, and that's huge, especially when there's such a lack of funding and lack of research really behind so much of women's advanced health, which is just frankly I think so fascinating. So while it's a competitive space, we are not seeing a huge move today. It's definitely a step further in the right direction. Anytime you get positive clinical trial data, I actually was surprised we didn't move more to the upside, but 2% gain, we'll take it.
Yeah, look, I'm not an analyst in this space. I've long said I think it's the most complicated part of the investable market in terms of the things you have to be aware of. But, maybe I'm naive, but I kind of thought that the stuff they already had at market was already working. Mm-hmm. And so my question is what is the point of this type of innovation other than it resets the schedule for when you can get generic, more affordable options? Because we know that's been a big discussion point for GLP-1s, is there being more generically made or that timeline's found. So I guess maybe this resets that, it's more innovation, but I thought we already solved this issue with the existing drugs.
I wonder if maybe like the intent here is, I think it does have a higher of effectiveness. So like it's like 28%, which is relatively, we're talking like a margin of strength, but the street does like that. But also I do wonder if now basically being able to sort of market and also really produce this medication that more so is targeted for like menopausal women, if that then opens a whole new, basically population that can get this for more affordable under like a healthcare plan, for example.
Yeah, hey, that's why I said I'm naive, so we'll see where it goes. A lot of its peers in the space have tried to make breakthroughs and sort of been disappointing lately, so I'm not surprised that the stock has really reacted favorably. It's been the first in a while to seemingly have some good news when it comes to these new drug innovations.
Yeah, and definitely at least seeing a positive reaction. We also did just casually hit another all-time high today for Eli Lilly, which has been a name that has been volatile, obviously a competitive space, but we are still up just shy of 8% on the year. Well, we will leave it there for the top of our show today. Coming up next, it's time to chart and trade 2 names in the broader tech space that are also on a nice run today. Marvell up over 12%. Lam Research also having a really decent session here, up now about 8%.
To what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab. Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today we are looking at two major winners of the session, Marvell as well as Lam Research. Joining us is our Chart Master, Rick Ducat, for a fresh look at these companies really clawing back after both being pummeled on Friday, along with the overall tech trade. And so both have been standouts. We'll start things off here, though, with Marvell, which is definitely the leader of the two, at least today, up over 13% now.
As you said, there's been a notable resurgence in many of these tech names, but for a lot of them, we're not really out of the woods yet in terms of the technical picture. What I mean by that, starting with Marvell, is we can see that we had our big gap to the upside here recently. 225 to 252 is around where those highs, pre-gap highs and post-gap lows come in. So now what we have, though, is a pretty interesting setup here. We have this kind of bull pennant type of shape, where after the big gap to the upside, we have this period of sideways consolidation forming this triangular shape here. So a bullish outlook, looking to make a play on this pattern, would be that you'd be looking for the breakout to resume above those initial highs of 324.20, and for the trend to continue after this consolidative period where traders perhaps were taking profits or readjusting their positions. I do notice, though, that we're still kind of within this triangular shape. We haven't quite had that breakout yet, so a bit of a question mark still. If you had more of a bearish outlook and you think that we were due for more declines in this name, you'd be looking for the break below 252, around that area, perhaps even for that gap to fill. Our old upward sloping channel type shape in blue left in the dust at this point here, but perhaps down the road you could see some of these lines come back into focus if the downtrend resumes here, or rather not resumes, but if the downtrend does start to materialize and we get a breakout below some of those levels we mentioned. So now we can see that our 5-day EMA in dark blue stands out here around 281 or so. So that's around where we had our lows of the day so far. That's a point that we could be looking for potential pivot type of activity. If we were to start closing below that level, that could be an early warning sign of potential trend change. We can see that the RSI as well, we had kind of a couple of different ways you could have drawn the trajectory here. The longer term darker green trend line, we did have a dip below that point that would now be looking like it's been broken as well here. We also could have had a shorter term trend line here in lighter green. Also, by that metric, we've seen a breakdown here. So, however, it's kind of complicated, though, because we're also, at the same time, re-entering the overbought area, that threshold of 70 here. Oftentimes, this can be a signifier of further strength to come in a trending market, kind of counterintuitively to the name overbought. You might think it's due for a pullback. That's more would be the interpretation. If we were in a range-bound area with a clearly defined ceiling, then you might be thinking perhaps more it would be a sign of overheating and potential slowdown or even collapse. But in this case, it signals strong momentum resuming here. So look for it to make new relative highs along with price if you did have that more bullish outlook. So finally, our volume profile study zoomed in on the past 3 months to kind of give a picture of what's been happening more in the recent activity without looking back at the historical levels that are so far to the downside now. 276 to 307 stands out as the area of note closest to our current activity. A break above that 307 levels where things really start to thin out from a volume perspective. We have another node down here between about 192 to 211. So that could be another area to look for solidification to the downside. Notice as well, very heavy volume recently. These volume spikes showing volume at least 50% above the 50-day simple moving average of volume can suggest high conviction on the part of traders after this upswing.
Yeah, and a good point there, and obviously seeing some definite enthusiasm tied to, just the recovery today, as we've only seen this rally continue to pick up steam actually as we've been on the air. And so appreciate that, Rick Ducat, of course, for that breakdown in terms of Marvell. Now, as we look to trade this name for example purposes, Alex, it's been one that's been somewhat of an unstoppable force this year.
Yeah, no doubt. And so I looked at a short put vertical, neutral to bullish, expires at the end of next week. 280, 275. Rick talked about the 5-day EMA. being around 280 also coincided with the lows of the day. That's a notable support zone for the short term. If you're able to collect $1.70, 330 would be the max loss, 170 would be the max profit, 278.30 would be your break-even point. So neutral to bullish strategy, going with that general uptrend that's been very, very prevalent in this stock, as you pointed out, Jenny and Rick showed us, but also neutral to bullish, looking for that short-term support level to be an area that holds at least over the next couple days till the end of next week.
Okay, now to look at another name that is in a very similar space today and obviously seeing a decent comeback also on the session, that is Lam Research. Now, move today is not as impressive, but I have to say the fact that we're comparing, a near 8% move to over 13%, not too bad of a day for both these stocks.
I think kind of my counterpoint would be perhaps the move is less impressive, but the breakdown maybe wasn't quite as bad either initially. So the reason I say that is after we topped out here, 346.19, where the price retreated to was around these old highs near 302. It seemed like we held on at that level, which also coincides with our trend line here. You could draw going around these relative low points here and our closing low that we saw here. That's around where we started to solidify, and we've had our bounce to the upside once more. So again, a bit of a caveat though, we have our downward sloping blue trend line here. We haven't quite taken that out yet here, so that's around where we've gotten stuck so far today. So another point to watch out for on the road back up to those highs near 346. So if we were to look more toward the downside, a repeated ceiling here near 275 stands out. We also had a very small gap and a subsequent low here near 264. So that gives us a bit of a supportive zone to consider if we do start to drift downward once more. In this case, we can see that our 5-day EMA in dark blue here comes in around 323.65, around where we caught our footing here, around with our trend line and our confluence that we mentioned earlier. We can also see that our 21-day exponential moving average in teal, representing 1 month of activity, comes together around that same area near 308. So even more emphasis on this point as a potentially supportive area. In this case, RSI had made a bounce. We recovered right around that 50 midline and where we had our green trend line still in play now. So momentum remains more biased toward the upside here. So again, look for it to start making new relative highs along with price if we do start to approach those old highs. Conversely, look for a breakdown below that trend line and the 50 midline here for further bearish signals to be generated. When we look at volume profile, in this case, here we're more zoomed in on the past 6 months rather than 3 months here because the rally wasn't quite as steep that we saw. So here we see that there was a node that formed around 315 to 325, another one formed here between 285 to 300. So that would be the closest areas of heavy trading. One more here lining up with that old brief range-bound period around 260 to 270.
Okay, and that's also a good point that a lot of these names that fell on Friday did not take it as badly as some others, and so today doesn't have maybe the same need to run up to the same extent as what we just looked at today with Marvell, but still, Lam Research having a really nice session up 7.7%. So now as we do look at trading this name, again, for example purposes, Alex, walk us through your thinking here.
Yeah, very similar thinking, a little bit less dramatic in the case of Lam Research, but same idea. So going up to the end of next week, the 18th expiration, selling a put vertical below the market, and in this case, looking at the 307.5, 302.5 short put vertical for $1.70 credit. You can make $170 on a max loss of 330, break even at 305.80. Very similar support levels in that sort of 308 to 310 level, hoping that those hold in the short term and this consistent bullish uptrend remains.
Yeah, and it has been a consistent one at that. I know, of course, excluding maybe Friday and some individual sessions, still been a really nice year for both of these stocks. But we will leave it there for Chartmaster today. Coming up next, we'll look at another name seeing some decent strength today. That is NVIDIA, with some news of developments, of course, overseas in South Korea, as well as SK Hynix. We'll discuss what that means for its full stack AI build coming up next.
For earnings breakdowns and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back. It's now time for FOMO, and today we are looking at NVIDIA teaming up with SK Telecom to build a massive AI cloud in South Korea, which is just another proof point NVIDIA is moving beyond just chips, positioning itself at the center of AI infrastructure. But for more details, we are joined by Marley Caden here in studio with us today to discuss all of the news with NVIDIA, as NVIDIA has kept us very busy this morning.
It certainly has. I mean, there's no shortage of headlines coming out of Jensen Huang's second trip to the country in less than a year. But let's talk about these SK Group deals. First, there's SK Telecom. They plan to build with NVIDIA a gigawatt-scale AI cloud, as you mentioned, Jenny, in South Korea, using NVIDIA's DSX platform, with the first AI factory planned to come online as early as 2027. So we're talking only about a year out here, or potentially even less. SK Telecom's AI cloud will power training, inference, and agentic workloads, including sovereign, physical, and enterprise AI services for industries across Korea, with the vision to expand beyond into the other Asian regions. Now, their AI cloud is this large-scale AI infrastructure consisting of these AI factories that make tokens. And SK Telecom's AI cloud will be built on that DSX full stack from NVIDIA. And that is the blueprint and software ecosystem designed to build, simulate, and operate large-scale AI factories. They say that they are planning to expand that collaboration from AI infrastructure deployments to joint research on next-gen AI factory architectures. And this, of course, deepening that partnership between NVIDIA and SK Group, the parent company of more talked about SK Hynix. And Jensen Huang went on and said that the SK's partnership today's AI industry would not have developed as wonderfully as it has, adding that we are, quote, at the beginning of the AI infrastructure build-out, and the future is quite bright. Now, SK Hynix struck its own deal with NVIDIA, a multi-year technology agreement that will see it commit to developing advanced types of memory for global data centers. This agreement, of course, comes as we continue to talk about these memory chip shortage, how these memory chip makers are having trouble keeping up with demand. It would enable supply to keep pace with NVIDIA's plans, but we already know that SK Hynix cannot meet full demand. It will allow it to meet NVIDIA's demand as NVIDIA expands into robotics, into personal computers, and also into AI supercomputers. Jensen Huang adding that SK Hynix has been NVIDIA's largest memory partner. SK Hynix will continue to be NVIDIA's largest memory partner. And in addition to that, NVIDIA's new Vera central processing units will use SK Hynix memory products. Now, those were some of the SK Group deals. There are other deals here. They have a deal with Naver, that's an internet and cloud computing company that will collaborate with NVIDIA to build these AI factories as a part of that gigawatt scale push. Jensen Huang and Naver's chairman came up with a concrete roadmap that they plan to jointly enter markets not just in Asia, but also in Europe and the Middle East, and then moving beyond Korea and into the Asia Pacific region. Naver has its own homegrown large language model, and they have played a central role in South Korea's efforts to try to advance sovereign AI. So that is another partnership. We don't have valuations on any of these deals. None of the companies, including NVIDIA, are commenting, but we also had some other deals. Jensen Huang had a series of meetings with Doosan, LG, Hyundai. We did get an announcement of an LG deal with NVIDIA as well, an AI factory that is dedicated to computing infrastructure to build, train, simulate, validate, and deploy AI agents at scale. They'll build one together to accelerate LG's next wave of AI-powered businesses across global markets. Now, the scope is broad. The collaboration, they say, covers robotics, autonomous driving, data center technologies, and GPU cloud services, combining NVIDIA's full-stack AI platform with LG's leadership in consumer electronics, mobility, and smart spaces. SK Telecom and NVIDIA, of course, already had their deal, and Hyundai is in talks with NVIDIA to have a combination of the car maker's industrial capabilities and AI that could, what they say, accelerate the next evolution of AI, which I think we're really talking about robotics here when we're talking about Hyundai, not cars. But that deal hasn't formally been announced, but there have been comments about the talks that are being had.
Yeah, I mean, this is a company that's expected to have almost $400 billion in revenue in 2027. Like, I'm not sure any deal can be big enough to really move the needle anymore, but you talk to a lot of different investors, traders, portfolio managers, analysts. Like, it seems like Micron and SanDisk have stole the show recently. Is there still a lot of love for NVIDIA? Is it sort of just hang out in the background? Or has the focus pivoted to these names that are moving around with a little bit more velocity?
I think there was some shift in the focus to the names that are moving around with some more velocity because we've seen just bigger moves in them in general. But I did talk to Joe Mazzola earlier today about the stacks data that we got from Schwab, and we did see a big changeover in terms of how NVIDIA was looked at in that report. It went from a top net sold stock in April to a top net buy in May. So I think the earnings were very important, obviously, in that case. Perhaps some of the selling that we saw in April and lowering the price and valuation helped with some of that re-entry into NVIDIA there as well. But also, headlines like these, as you say, it's such a big company, it's really hard to move the needle, but they certainly don't hurt. I mean, any small move in the positive is a net positive for investors. So yes, we aren't seeing, 16% moves to the upside or 20% moves to the upside like we see in some of these names on the flip side when they announce these partnerships. But any positive mover of a company of the size of NVIDIA is always a net positive.
I would agree, and I think that's why we also follow NVIDIA as closely as we all do, and that's why even a 1.5% move, I mean, just as far as its massive reach, it's still significant. It's not necessarily the same volatilities we're seeing in like Marvell today, but I mean, it's such a massive company. I also think Jensen Huang becoming more and more of like the true mouthpiece of broader AI trends, and so as we look at trading this name now, for example purposes, the difficult task is gauging what happens next. And so obviously preparing to be risk defined given the fact that NVIDIA for a long time actually now has been kind of just stuck.
Yeah, it's like $600 billion off its highs. So if you think it can just make a move back towards, let's say, 220 over the next week, if you believe in these deals and you believe in the comeback of NVIDIA and these AI trades, this is a bullish call debit spread. It's the 210, 220 expires at the end of next week. $3 debit would mean you risk $300 with a chance to make $700. So you can make almost, or actually more than 2 times the risk on this trade if you get the move. But you would need a move just to break even. So break even would be 213. So you would need a move like today, at least 2 more times by the end of next week just to break even. But if it does build on some of its successes today and build some momentum into the end of next week, chance to make $700 on $300 in risk.
Yeah, and NVIDIA still hanging on to at least a firm green session, although we've pared back some of the strength of this morning at least, but still at least trying to break out of this recent sort of stagnation we've been in for overall price. But we will leave it there for FOMO today. Appreciate it to Marley Caden for all of that insight. But coming up next, AI is already reshaping who gets hired, how careers start, and why more young workers are choosing more of these alternative career paths. We'll discuss more on how the rules of the job market are changing rapidly when Next Gen returns.
she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Access data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome back to Next Gen Investing. Now, OpenAI may be about to reinvent its biggest product. A new report says that ChatGPT is shifting away from simple chat and towards a full super app built around agents and coding tools. So for more details today, we are joined by Sam Badas, host of Morning Trade Live and Market on Close. Sam, tell us the details of this story, especially as, of course, enthusiasm around its potential IPO is definitely building this summer.
Yeah, certainly, and we haven't quite got the details of that. So an interesting report just ahead of that. Basically, my takeaways from this, Jenny, this report by the Financial Times is that OpenAI is looking to put everything under one roof, as you mentioned, the super app, and it's looking to be sort of a one-stop shop here, and it's changing the economics. So the way you can understand it is it's going to stop being a chatbot and start being the operating platform. And one employee summed it up in just 3 words, according to the Financial Times: chat is dead. So take away from that what you will, but this is not about getting just another user, which it has a lot of, to ask another question. It's about getting enterprises to run their workloads on this app. And this is obviously to try to compete with the likes of some of the competition. So the Financial Times is basically saying that this is the biggest overhaul we've seen of ChatGPT since it started. And it's basically looking, as I mentioned, to change the economics here as it looks for new engines of growth ahead of the expected listing or the planned IPO this year, which, as I mentioned, we haven't got many specifics of just yet. It was actually interesting listening to Sam Altman the other day when he was asked, is this a race? Has Anthropic beaten you in this race? And he said, no, look, we'll do it in our own time. But basically, they're trying to make this super app that does combine the coding tools with the AI agents. And they believe this is a pretty big deal, as I mentioned. And obviously, it's different to what they've been doing, but they need to come up with a better strategy in order to make more money here. And basically, they want to be able to perform multiple tasks for users, to book travel, to organize calendars, and to be more of a valuable platform than just a chatbot. This is according to the FT. But obviously, we know that that's the goal here with the super app. That's nothing really new. I think a lot of this had been building, but the products, a lot of it's got to do with Codex. This is obviously its ability to write code and create software based on simple instructions from users. And this overhaul is going to be coming in the next couple of weeks, according to this report. So the changes will initially appear on ChatGPT's website and the mobile apps, and basically move customers towards that coding, the image generation, and apps from the external partners. So they're basically trying to, as far as the FT is concerned, move closer to that of an Anthropic, where obviously they are developing these products more for enterprise, for business, which is really generating where the money comes from right now. So you've had a lot of analysts sort of weighing in on this, but I think what's really interesting is when you take a look at Codex, the FT has been crunching the numbers here. You've got 2 million businesses that use OpenAI's products account for roughly 40% of its revenue. So this company obviously anticipating that this will rise to 50% by the end of the year. And they've basically managed to increase the user base sixfold as well. So obviously they're gaining a lot of traction, but it is coming at a time when they are facing very intensified competition, as I mentioned, from the Anthropics, as we mentioned. It's interesting because it kind of reminds me of the ubiquitous social media app WeChat over in China. Now, their strategies are very, very different as far as the ecosystem is concerned. But WeChat has for a long time been the super app of China, which allows you within the app to book on different platforms. If you want to book your travel or you want to buy something from JD.com or what have you, it's all done within that app. And now WeChat, which has been making a lot of headlines, is also trying to build an AI agent within that, and they are actually reportedly in the testing phase. But basically, they're just looking to redesign the ChatGPT interface here. It's going to be adding new prompts, new features, but also, as I mentioned, directing those users towards the coding tools as well. And this is actually built by partners like your Canvas and your Booking.com, according to FT, which has seen some details of these plans now. And basically, they're going to eventually get to a stage where they can automatically understand users' intentions when they're on the app or the site. And this is the whole point of the AI agents, is to kind of get a feel for the user and what it likes to do and prompt it based on its behavior. So yeah, a really interesting story, and I think the timing is fascinating, particularly as this is kind of like the holdout of the big three that we've been waiting for as far as the details of what that public listing potentially might actually look like, guys.
Yeah, and it will definitely be one of note, as we've been talking about it for years now. So I'm excited to just get some of these events out of the way, because it's like the hype is definitely so real. But at least some developments as far as the company structure is concerned for today. So appreciate it, Sam Vadas, host of Morning Trade Live and Market on Close. But now shifting gears to the ever-changing job market, which is evolving in real time thanks to AI. Companies are rethinking entry-level roles, and a growing number of Gen Z workers are bypassing traditional careers altogether. Connor Vukulich, the founder and CEO of Poppin' Jobs, joins us now for really more on how AI is redefining hiring. So Connor, thank you so much for joining us today. You've said AI is not necessarily eliminating entry-level jobs, but rewriting them. So how should candidates then be repositioning themselves right now to stay competitive in this market?
I think a lot of things that Gen Z and these new entrants need to really position themselves into is really learning those AI skills and being able to apply them to their new jobs. One thing AI can't do is take the knowledge and the human knowledge that you have. It's really good at taking all the things you know and kind of streamlining it and making it really efficient for you. And that's, I think, where most of the people need to kind of upskill themselves in.
Connor, how far are we from this feeling more ubiquitous? I imagine if you go to the random mom and pop business, maybe it's a restaurant in the Midwest that's been operating, breakfast diner for a long time, there's probably not any AI. But if you went and worked for, Alphabet or one of these Silicon Valley companies, it might be being forced upon you to rationalize and justify the investment. How far until it becomes a baseline requirement to get any type of job in your mind?
I think we're still a few years out. I mean, people who are in the industry who are kind of have been doing it for a long time, they're not super into changing their methodologies, especially mom and pop shops. A lot of them are older. They're kind of just doing this on the side. This isn't something that they necessarily want to change their practices and what they're doing. So I think over the next couple of years, as more younger generation is getting into these mom and pop shop businesses, or we're seeing a lot of the side hustles from Gen Z, as these start being the main small business driver, I think that's where we're going to start seeing a lot of the AI transition to where it's more mandatory and not something that you can just kind of forget, and maybe they have it, maybe they don't.
Okay, and so you have used this term as like AI fluency is now being seen as more of this baseline skill. So what does that actually look like, first of all? And second, how do job seekers actually be able to prove that now they have it?
I think AI fluency, like I kind of stated previously, it's really about, being able to put your knowledge into AI and being able to extract great data out of it. So, as a business person, I'm not going to be asking ChatGPT to do coding for me and saying, hey, now I know how to code. It's really, I'm putting my business knowledge into it, being able to prompt it to give me good information out. So being able to do that on a, entry-level position, say in sales, being able to say, hey, this is my sales knowledge. What are some of the strategies that you can see over all the knowledge that's inside of, the human knowledge? What are the different things that can be pulled out of that and help me apply my sales knowledge better? And then, as somebody who's Gen Z going into the workforce and saying, hey, am I AI fluent? I think the best way to see that is, is AI making you more efficient, or is it trying to replace? Are you trying to replace your job with AI?
Yeah, Connor, it certainly sounds like the traditional approach of application, interview, everything's being augmented and disrupted, which may be for good reason, but we'll see ultimately in time. But what about the entrepreneur? Has AI actually presented more opportunities, or has it taken away some of those opportunities as we've seen some of this technology really advance things?
Yeah, I mean, this has happened before in the past. If you look at, the 1920s, we had a huge era where there was low job numbers. People weren't able to find employment, and so what did people do? Is people started building different companies. So, we can almost think Gen Z is kind of like the silent generation all over again, where instead of, the 1920s, we're in a modern era with technology, with AI. And so that's kind of what I'm seeing, and what we're seeing at Poppin' Jobs is, realistically, people need to get that experience, and if they can't find it in the job market, what they're going to do is they're going to start creating it.
Yeah, absolutely, and I feel like we've heard that now time and time again, so definitely a theme that is one to watch. But so appreciate your time today. Really great conversation. Connor Vukolich, CEO and founder of Poppin' Jobs. Now coming up next, optical cable is a small cap with big growth, posting double-digit revenue growth in its latest quarter. So after the break, we will discuss what is driving demand and how sustainable this momentum could be.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. Optical cable did deliver a really strong quarter, with its backlog leaping more than 80% from last year and a double-digit revenue growth. So for more insights today, we are joined by George Tillis, Senior Markets Correspondent for the network. So George, walk us through this report and what stuck out to you.
Well, I think this is interesting because, we're looking at some of the bigger players all the time in our segments for optical fiber networks and, of course, optics, which are displacing essentially copper based on speed of communications, data transfer. And some smaller players, like tier 2 companies, I would call them, like optical cable company, actually is a small hardware manufacturer specializing in high performance fiber. They don't compete in the hyperscale markets because that's more concentrated in big names like Aristanet, Ciena, Cisco, and so forth. But this is a small business that is actually quite growing quite nicely. They did report earnings that beat the estimates. They actually posted a 12-cent EPS number on an adjusted basis per share profit. That's a turnaround compared to the loss last year for the same quarter of 9 cents. And sales were posted at $22 million, up 26.6% versus last year's 17.5. Gross margins improved to 34% of sales, up 400 basis points. And their backlog improved as well. If you look at the backlog, in notional value, it's low, considering some of the billion-dollar backlogs that a lot of these bigger names have. But they did increase it to $13.1 million versus $10.4 million for Q1, which is a sequential increase of over 30%. But one of the things I noticed about this business, not only is it a small business in terms of sales and market cap right now, based on Friday's close, is around $109 million. Sales last year around $74 million. But interesting enough, they don't sell to the tier 1 hyperscale end markets. They sell to other areas, tier 2 areas, which include the military. So they are a certified military supplier. And they also sell to industrial mining and as well as smaller automotive manufacturers out there. So again, they're a U.S.-based firm that maintain manufacturing in the United States with plants in North Carolina, Texas, and Virginia. And they seem to be growing, quite nicely alongside some of the majors out there in the optical networking and communications equipment supplier markets.
George, you mentioned that they're not operating in that hyperscale market, but with that demand being so high there, is sort of that tier 2 business then falling down to them? And so in a way, they still are benefiting from that hyperscale demand?
Yes, I mean, that's just plainly putting it, that's what's going on here. There is a transformation, too, in the underlying financials, which is important, that corresponds to the price action we've seen last year. I think the price was up last 52 weeks over 600%. And, a lot of times you'll see micro cap companies, even smaller than this one, move on that percent basis based on some news catalyst on any given day. This one has been steadily growing based on improving revenues, fundamentals, at least on an earnings basis, that are now profits versus losses last year. Gross margins are improving, operating leverage is improving. And that's why the price is moving higher. And there is a trickle-down effect from what's going on in the data center business, the tier 1 companies, to the tier 2 markets that OCC sells into. Some of the other competitors in the space include Belden, BDC, CommScope, COMM. These are other smaller competitors that compete with OCC as well.
Yeah, a name that has definitely been of note, especially with a near 76% gain on today's session. So appreciate it, George Tellis, for all of that insight. That'll also do it for Alex and myself for Next Gen Investing to kick off this week. Appreciate you all for tuning in. We have the watch list coming up next.
Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that if they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. So glad you are with us. We saw some of a bounce back from in tech from Friday's big sell-off, but a little bit of red coming in on the screen. In our tech spotlight, we'll dive into the AI hyperscalers and discuss Amazon, Microsoft, Alphabet, Meta. And our panel will take a look at the AI build-out, specifically the data center. Also, we'll take you the real options trades today, looking at Corning, Johnson & Johnson, and 3M. Let's take a quick look here at the markets. All right, now we take a look. S&P 500 right now is up 42 points, more than a half of 1%. 74.26. NASDAQ Composite up 2%. Dow Jones Industrial Average down 35 points. Russell 1%. All right, taking a look at the heat map.
I'm going to jump in here. You got, this is Diane here. We usually start out the show together, and we'll get into this. We're looking at the heat map now. You've got the heavyweights leading the pack, information technology at the top of the leaderboard, pound for pound. That is what is helping the S&P 500. We do still have some sectors in the green. We are off the highs of the session right now. Information technology is still at the top of the list. Energy is higher also as well. We're better by 1% over in energy. Consumer discretionary still has a gain, but we've been pulling back off the highs of the session. When you look at the pressure within the major or within the broadest benchmark of U.S. stocks, utilities, real estate, materials, we're looking at some of the other price action right now. Again, in equities, we have mixed markets now, so we're off the highs of the session. Crude oil is still higher, but has eased back from the highs that we saw earlier in today's session. And this as the equity market continues to rebound from that sharp sell-off that we saw on Friday. Part of that has to do with some ratcheting back of the rhetoric. Between, not just rhetoric, action between Iran and Israel, and comments from President Trump as well, trying to hold on to this tenuous ceasefire here. We are seeing gold little change right now.
Yield on the 10-year up 3 basis points, so not a big move there. Dollar off by a little bit more than 0.1%. We're below 100 right now. Bitcoin is gaining some ground after sliding recently. You are seeing Bitcoin better by more than 5% right now. Nicole, I'll hand it back to you.
Yeah, Diane, you know what? I think that we should talk a little bit about Iran. But let's take a commercial break. Can we do that, you guys, just so I can regroup a little bit? Thank you.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
I don't want to do it.
Real-time access, data-driven analysis, from U.S. equities to global macro matters.
Ain't doing it.
Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
I'm not going to do it.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
We're back on the watch list. We are continuing to keep our eye on the Worldwide Developers Conference, which kicked off today. It's at the beginning of the conference. We have some initial takeaways from what they're working on. The big focus going into this event was what's going to happen with Siri. Where does Apple stand with regard to artificial intelligence? Apple has regained some ground this year. It's been outperforming the S&P 500. We're pulling back a little bit at this hour. Earlier in the session, it was higher. They've talked about iOS 27. They're focusing on longevity and everyday improvements with that. They're not launching new iPhones today. They never do at this event. But the software unveiled at this is the biggest deal here. It will come alongside some of the new hardware this fall. Again, one of the biggest announcements, iOS 27. It'll support the same devices as iOS 26, but also they're doing a call back to the iPhone 11. They say that they have figured out how to make this available even on older iPhone models, which will help with longevity. That's been one of the criticisms about Apple. And do I need to get a new iPhone every year, every other year? So they're optimizing also their CPU scheduler to help improve performance on older iPhones. That helps aging devices, they say, feel faster and remain useful longer. Smarter connectivity, they talked about faster sharing there. Apple making transitions between Wi-Fi and cellular networks more seamless. Talking about when you get off of a plane going from Wi-Fi to cellular, you can automatically move from the airplane Wi-Fi, for instance, to your cellular service without interruption there. AirDrop transfers, they say, are now up to 80% faster. So some of this new technology is about speed, is about efficiency. Apple Intelligence, Siri taking center stage there. Now, Tim Cook, the soon-to-be departing CEO, said this year's WWDC would focus heavily on Apple Intelligence and Siri, and they did spend a lot of time on that. Siri is becoming more conversational, context aware. It still will use the familiar Hey Siri activation. When I was listening to it, though, the voice was interesting. It sounded very young, very Gen Z, but they say you can change the voice to what you're looking for. Users can ask more natural questions, they said, that draw on world knowledge. For instance, they gave a concert example. I'll use this example. You can say, hey, Siri, when's the next Taylor Swift concert? She'll say when. Then you can go deeper. You can say, how do I get tickets? And then set a reminder. So really acting like a virtual assistant. Remind me when tickets go on sale. So Apple trying to position Siri as less of a just voice command tool and more as a true assistant. The new voice, again, gives you different options. Privacy is still the way Apple is trying to differentiate itself. It's talked about that a lot. And one of the reasons that some would say it's gone slow on AI development, the officials there emphasizing that, quote, privacy in AI is non-negotiable. They say user data is not stored or accessible to Apple or third parties, and outside experts can continue to verify these claims. Apple Intelligence, they say, will feature deeper app integration, on-screen awareness, customizable AI actions while maintaining privacy protections. And they kind of made some barbs about other competitors, if you will, and data tracking. And Apple essentially says, we don't do that when you think about, for instance, Safari, etc. And the improvements, they say, will include better image understanding, image generation, photo editing, dictation capabilities, child safety. This stood out to me as a parent as well. They devoted a lot more time than I expected on child safety features. They emphasized the balance between learning, creativity, connection. There are tools, for instance, already that exist when you're managing your device with regard to child protections, but they're doing even greater protection on there. They also suggest, they said, access to personal devices should be limited for children under 13. So they're not willing to just sell more devices just because a kid wants one. Child accounts, they say, will automatically include age-appropriate restrictions and protections. Those exist now, but they're saying there's going to be even more, kind of natural enforcement, more intuitive about how parents can use that. And if your child already has an existing account, but it's not a child account, parents, they say, can convert to that account. Now there's going to be a new ask to buy, ask to browse features that'll give parents greater kind of control over purchases and web activity. There's also time allowances that existed before, but you'll see it better. So it's not so much about flashy hardware. WWDC is not usually about flashy hardware, but what's going on inside your devices, your phone, your Mac, your AirPods, etc. We want to widen back out and go deeper on some of tech's biggest names in our tech spotlight. Joining us now, we want to bring in Dryden Pence, Chief Investment Officer, Pence Capital Management. Today we've got a lot of focus on the tech sector because we're seeing the buy the dip crowd kind of come out in force, right? And it's good to see you, by the way. After that sell-off that we saw on Friday, the worst sell-off since April 2025. You remember what was happening in April 2025. But on Friday it wasn't about tariffs. But again, the buy the dip crowd came in quick. It's information technology that's keeping us higher. What's your take when you think about today? Are you surprised by how fast investors are getting back in?
No, I'm not, Diana. Thank you for. It's good to see you as well. Not worried about that at all. I mean, you get these moments of hiccups and overreactions to various things, but the fundamental drivers of what's driving the market, of AI and the economy and the relative strength, all of those things, people move back in because, and we've been saying now for over a year, buy chips on dips, because this is the thing that's driving increased labor productivity. That drives earnings, and earnings are robust. The economy seems to be robust in spite of all the geopolitical events, and I think that we're continuing to move forward. So not surprised that it's recovered so quickly. We actually think these are like little hiccups, and we're moving forward to a very strong year and continue to be driven by AI. AI is not paying attention to oil, and I think that that's an important issue.
I want to dive into some members of the Mag 7 that I know were, on your watch list. We were just talking about Apple. They, of course, have their Worldwide Developers Conference today, but you've got your eye on some other members of the Mag 7, although some would say, the moniker doesn't apply across the group anymore. But Alphabet Google, let's talk about that one. It's under some pressure today amid, the buy the dip crowd. What are your views on Alphabet Google now?
Still very strong. I mean, the big thing is when you take a look at Alphabet, you have roughly, they control search. Everybody's using them all the time. And as they begin to have greater AI integration in what they're doing, this absolute dependence that people have is only going to expand. So we continue to see continuing to have expanded investment in the future. That's important. Companies were buying back all their stock over the last couple of years. Now they're issuing stock because they got a better place to go. They're going to invest in the future of labor productivity, in the future of U.S. economy. So we like to see this issuance. We like to see this money being invested in the future. And because 90+% of everybody's using Google all the time, it's going to be integrated in everything you do. And so we only see this as growing tremendously. We see their earnings expectations only going up. And we think that they're going to continue to capture dominant pieces of this market. So again, it's something that we are very favorable on because they're so absolutely dominant in everything we do.
Okay, let's talk about what hasn't been dominant recently. We'll start out with Meta. Microsoft's been making a little bit of a comeback, but let's start with Meta. So Meta is under a little bit of pressure as well today. We're down below 600 right now. It's been a long time since it's seen levels like $700. In terms of where shares have been performing. It says it wants to go to the market and tap the market, raise some debt raises to finance its AI ambitions. What's your thought on Meta and where it goes from here?
Meta has been behind. They really have kind of lagged behind the other companies in their AI investments. They've got some catching up to do. I think across the sector here, what's important is the risk of over-investing in AI development is much, much less than the risk of under-investing. You over-invest, the market's going to catch up to you with rapid adoption. You under-invest, you get left behind and could be left behind permanently. So Meta's behind. They're going to have to make these investments. They need to catch up. Their superintelligence unit, they're beginning to integrate that. They're beginning to move forward. They're expected to grow earnings at about 30%, which is really good, and we like that. But they're going to have to continue to make greater investments in the parts of the hyperscaling and parts of this market that's working. They have 20% of all the digital ad spend, only second to Google, but they really need to focus and catch up. And so I'm actually liking the idea that they were going to tap equity markets. I don't think they have yet, but because it's what you do with the money if you're doing something with the money that increases labor productivity or increases your ability to dominate in your market, we like to see those investments. And that's where companies, again, fewer companies are, we used to 30 billion a quarter or something in buybacks. Now it's way down to 8, and now companies are tapping the equity markets to invest in the future. And I like to see that. I think that's more important. And so we're positive on it. They've got a lot of work to do to catch up, though.
Okay, they have a lot of work to do to catch up. Recently, Microsoft had been staging a little bit of a recovery, but again, it's taken another hit. It's out of bear market territory. There are some who say it should not have been caught up in the SaaS apocalypse, but there are some who say, yes, it should have been. What's your view on Microsoft now?
95% of the Fortune 500 companies use Microsoft. Azure is beginning to really kind of take off and get in. They've got, exceeding 20 million paid seats, and it's increasing. Also, the Copilot's got 20 million paid seats, and it's increasing like 200% a year. So the important point of that is you're so dominant in what businesses are doing. As businesses begin to adopt this new environment of this technological development, Microsoft is going to be embedded in that. It's going to be far easier to find the right Microsoft thing, even if it's suboptimal maybe to a few others, than it is to kind of make a complete change. So as they continue to do this, we see them only becoming more dominant over time. Now, the issue about tapping equity markets and things like that, again, I like that, because while people that are trading and trying to say exactly what they're going to do on PEs and stuff like that, the E is growing, earnings are growing, and anything that one can do to increase earnings and make that investment, I like to see. And the reason why is the market is actually a little cheaper now than it was a while back, because earnings continue to grow rapidly, and that's what we're going to focus on.
So the E is, it helps justify where the P is right now, Dryden. Let me ask you this. It feels like volatility tied to the geopolitical tensions in the Middle East is taking a little bit more of a backseat now. Do you think that makes sense?
I think so. I mean, at some point, we're going to get into a resolution on the Middle East. The bottom line is Iran needs money, the world needs oil, and in the end, economics always beats politics. And so I think if we just kind of work through this, give it a little time, we're going to find the Straits of Hormuz open up. We're going to find that we're not as dependent 2 or 3 years from now as we are today, because people are going to find ways to get around this choke point or not be so vulnerable to the choke point. I mean, pipelines work. The Saudis have proven that. And so I think that we're probably between now and the next 60, 90 days, they're going to have resolved this to some extent. I don't think traffic ever gets back to what it was. But I think as far as oil prices are concerned, we're going to be in a situation where we're going to be back below 80. And I think that's going to work out well for everybody. So geopolitical hits about a 45-day round trip to the market on average. And so we kind of tend to look through that. And again, AI doesn't care that much about oil.
That's a great point. That is an excellent point, and I like the sounds of lower oil prices as a consumer. I started feeling better this weekend when the gas price was getting closer to $4. Thank you, Dryden. That's Dryden Pence. He is the Chief Investment Officer of Pence Capital Management. We appreciate your time today, Dryden. Coming up, we've got some charts for you to keep your eye on as the new trading week is well underway. The watch list. We'll be right back after this break.
And the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
My man. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade. giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Kevin Green.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
We're back on the watch list. Micron bouncing back in a big way today after Wells Fargo hiked its price target to $1,220. That's up from $550. The analyst still sees continued upside driven by greater confidence in duration of persistent memory tightness. So you are seeing shares of Micron rally more than 10% today. Keep in mind, it taken a hit on Friday amid that sell-off. Memory gaining ground today. Not just Micron, SanDisk has also been gaining some ground today amid more bullish sentiment from the sell side. Time now for charts to watch. Joining us for that is Ben Watson, Senior Manager of Trading Services, Charles Schwab. So we're going to dive into the S&P 500 today, gaining some ground after that sell-off on Friday. Don't call it a comeback. We've been here for years, Ben. All right, talk us through what levels you're watching here on the broadest benchmark of U.S. stocks.
Absolutely, and hi, Diane. It's great to see you. Yeah, it's not yet Tuesday, so I don't know that we can call this a turnaround Tuesday. Maybe it's a middling Monday, if you will. But I'll tell you what, the S&P 500 is seeing a little bit of a rebound here today off of a support area that really kind of extends right around the 7340, 7350 area, which was an area of support before. It was, you go back into, really the beginning of May, and we got a couple of different bounces at that level, rallied up into the 7,500 mark, pulled back, and then rallied through that, and now potentially acting as that support. We're well below the 10-period moving average here, but we're well off of the 50-period moving average in that same time frame. So there is still room. I don't want to be, unequivocal about this, but there is still room to move to the downside if it breaks through the 7340 level. That being said, we're kind of approaching the midpoint of Friday's big red candle. That could act as a near-term resistance that sits just above the 7,400 mark. We're at 7,430, so call it 7,450 or so, and then you've got that 7,500 resistance overhead and on up into the 76, 7,700 area there, Diane. But RSI is tailing off still at the moment.
Okay, all right. So something to pay attention to there. Let's talk an individual mover that's on your radar today. United Health gaining some more ground today. It's up more than 20% so far this year. Many said this would be the year that we'd see that kind of turnaround after some pressure that we saw last year. Now on a year-over-year basis it's stronger, but a lot of that's because of the momentum this year. Talk us through what you're noticing here.
For sure. You've gone from a quarter or 2 quarters ago with a big gap to the downside on a miss, and then a beat, and it moves to the upside. Now it's banging its head on this 401 resistance area, starting to break through late in the day today.
401 is a very important number.
Kind of an alternative to tech, if you will, maybe part of that rotational trade. But the momentum was there, so investors looking to get out of something that is maybe scary from that standpoint in tech, rotating into something that seems somewhat defensive in nature, looking to come in here with something that has some headroom to grow, breaking above that resistance area, and the RSI is just
lucky employee number
breaking up into that overbought or extreme range. So still potentially some momentum behind this move, but moving to the downside, it's got a support level around the 380 if it does bounce down from 401, because it hasn't really confirmed this breakout yet, Diane.
Okay, all right. We shall continue to watch that one. Let's pivot over to Old Dominion, ODFL, the ticker here. It's been an outperformer so far this year, but a lot of this has to do with this breakout since mid-May. It's up 25% over the last 20 trading days. What stands out when you look at this chart?
Yeah, what's that mean?
Well, this, I think, to a certain extent, is an anti-oil volatility or crude oil and diesel fuel volatility play, simply in the fact that because they're a less than truckload carrier, they're able to react in terms of their pricing and therefore their revenue more quickly than full truckload or line
Sounds
haul
like a
carriers
scam.
like JBHT, JB Hunt carriers, because they can renegotiate those contracts on a shorter term basis because they're not hauling a whole truckload of goods. They're doing smaller loads, and those smaller loads reflective of current fuel prices. Therefore, you see, even as crude oil continues to move up and down in a more volatile fashion, that's translating into more solid revenue here for ODFL. The breakout is there. You know, I mean, it still has some support down around that 227, but a symmetrical target off of this breakout at 227, simply from a technical analysis standpoint, puts that target potential, the measured move, up around 262, you know, within the next few weeks, and you've got the RSI pushing up into that extreme. It's got some momentum behind it, and it's got that kind of pricing pressure and advantage. Diane?
All right, good stuff. Thank you, Ben. That's Ben Watts, our Senior Manager of Trading Services. Charles Schwab always comes with the great insights, whether we're talking about the S&P 500 or individual movers. Coming up, we'll dive into the AI build-out, specifically data centers, and whether they can match the skyrocketing compute demand. We've got that and more when the watch list returns.
Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick.
You get sick.
I can buy that now.
Schwab. Invest your way with Schwab.
I think it would be best if we didn't get
Live
sick.
from Chicago, this is Trading 360.
You know,
I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis.
Do you think we can
and
do about
actionable
this?
Context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were.
I don't think it was a good idea.
Almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram.
That was a good one. That was a good one.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob. Hey, Andrew. Last year, my
Hey,
dad
Bob,
had a
what's going
really
on?
big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
time now for our watch list panel, where we dig deeper into the AI build out and talk where data centers and beyond stand within this. Joining us now are Tiffany McGee, CEO and CIO, Pivotal Advisors, and Matt Dimitroshen, CIO of Composition Wealth. It's good to be with both of you all today. So NVIDIA CEO Jensen Huang said over the weekend that the recent sell-off in tech stocks could be a buying opportunity. Seems that way today. I guess when Jensen speaks, the market listens.
Not really.
Investors to, quote, be very happy about the pullback, and that allows them to buy
That's a
shares at
lie.
a discount. Tiffany, you say the AI trade is evolving, not slowing. Can you tell me more about that view?
Yeah.
Yeah, absolutely. Thanks for having me. So yeah, I think when we kind of first started in this first stage of AI, we were thinking about it potentially being a one or few stock story, right? And so
Pay
really,
attention to
the
her,
AI
Diane.
trade is clearly not ending, right? It's really just starting to kind of broaden. And when we think about the first phase, kind of dominated by NVIDIA and the hyperscalers, the next phase is really about the broader ecosystem, really required to kind of build and secure and deploy AI. So when I think about
I didn't think about it like that.
What should be top of mind for investors right now as they think about this trade is really diversifying their AI exposure, the same way that they would the rest of their portfolio. When you think about the fact that data centers are now the largest segment of the U.S. private business construction.
You don't think we're in the build-out right now,
I think
baby?
that's really, really key.
Very key. All right, Matt, let's get into your views. You said that the pause that we saw on Friday was natural as we await more clarity on whether the swift move higher in earnings expectations adequately accounts for the new level of demand. Did you expect to see the buy the dip crowd so quickly?
I didn't. I think from a technical standpoint, there could have been signs that we actually would have seen a little bit more sell-off going on. So kind of surprised that they came back in. But to your point, I mean, there is a strong secular trend around that. And when you get support from one of the leading CEOs, it doesn't surprise me that we get some investors to come back in.
Yeah, I mean, he didn't even have to say much. Now, listen, there were some deals that happened on the table with South Korea, such as with SK Hynix. Tiffany, I want to get your thought on this. You say the next phase of AI will require significant investment in power, cooling, networking, and physical infrastructure. So are you expecting us to see more momentum in the picks and shovels? Because, for instance, even today, the move that we saw higher in NVIDIA right now, not as high as we were earlier in the session. What's your thought?
Yeah, absolutely. And so when we think about like the current bottlenecks, they really reflect a strong demand. And when you think about the fact that Google recently raised approximately $85 billion to support AI-related investment, so that is really kind of like pushing everything along. And so we like to think about classifying these AI opportunities into about three categories. So AI leaders, those are like your NVIDIAs, Microsofts, Alphabet, Amazon, and then AI enablers like Palo Alto Networks, CrowdStrike. And then these AI kind of like enablers, like a company called like Omnicell, which is really kind of automating hospital automation. And so when you're thinking about where the next opportunities or beneficiaries from this from the AI trade is, it's really about a combination of having all of those, and as well as like emerging markets as well.
Okay, all right, Matt, I want to get your view. For retail investors who feel like they've missed out on the first wave of AI winners, where do you see the next phase of opportunity coming from?
Yeah, I think what we've really started with early days was NVIDIA. That was dominant in the GPU side of things. What we've seen in the last several months is the strong demand around semiconductors, particularly power and memory chips. I think what we're really starting to see is a broadening of that. So it's broadening use cases of chips. Around that, it's even the semiconductor equipment companies, such as an Applied Materials, that's providing the equipment that's going to really satisfy what is going to be significant demand for the next several years. We kind of like that infrastructure play at the moment, more so than it is individual AI players, just because there's still a lot to figure out into exactly what models end up kind of winning this space, as well as which models and companies really need that AI data center demand. So we're really focusing on the infrastructure players, whether that being semiconductors, or as Tiffany kind of even commented, those picks and shovels, even those that are providing some of the power infrastructures to support the data centers.
So Tiffany, let's go back to you. Tell us more about your...
So we look at how well on year date, that really is evidence, right? And so I think number one is evidence it's evidence to support an overall diversified portfolio, but it really is evidence to support the fact that this AI momentum is really showing up in a lot of different places. So a couple of ideas in terms of emerging markets. Taiwan Semi is certainly certainly a stock if you want to go single stock play. It's right. Course, critical supplier of AI in the AI ecosystem, and and so that is one option. But how we like to play it is in an actively managed fund, especially when it comes to emerging markets. You don't necessarily want to go an index fund because there's some limitations there. So one that is pretty decent is JP Morgan Emerging Markets Equity, GEMWX, depending on the share class. It really has this exposure to China A shares, which is really a key area. It's got local research teams. You want boots in the ground, not someone sitting in New York kind of managing from afar. It's got access to off-index opportunities, which is really key here, especially those IPOs. So there are a number of ways to play this.
Matt, I want to give the final word to you. One of the things you say, you're more cautious in the data center space. What do you mean by that?
Yeah, I do expect at some point, and this is years out, not in the next 12 months, that we will end up in a point where we do have excess supply of data centers. And it's really going to come from, as everybody's trying to build out in advance of this exponential demand, everybody's playing as if they're building out as if they're going to be a winner in the space. And we don't believe that all LLMs are going to be winners. And so I think we'll get to a point down the line where maybe one or two of the players are the dominant providers, and you may have excess data center capacity with some others. And so we're trying to avoid picking who those winners are going to be, just because we see significant innovation happening and it's just too early and too quick to call that. And so we'd rather, again, play the picks and shovels or pay those that are providing the infrastructure to all, as we start to figure out in the background who those ultimate winners may be. A lot's changed in the last 12 months, and we expect 12 months from now a lot will change as well.
All right, thank you both. A lot certainly changed. We're in the new frontier, as they say. That's Matt Dimitroshin, CIO of Composition Wealth, and Tiffany McGee, CEO and CIO of Pivotal Advisors. Thank you both. Coming up, we'll look at sectors on the move in today's session. Also examine an ETF that aims to take advantage of the World Cup, which begins this week at sites all around the U.S., Canada, and Mexico. Watch Us will return after this short break.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Welcome back to the Watch List. I'm Dan King Hall coming to you live from the New York Stock Exchange. Time now to take a look at the sectors that are moving markets into the close. Joining me now is my co-host of Fast Market, Kevin Hinks. He's over at the CBOE. As you know, we've got you covered from exchange to exchange. Kevin, good to see you again. All right, let's get into this market action. We're off the highs of the session right now, but we still got gains on the board. A lot of that has to do with the pound for pound heavyweight information technology. Walk us through what you're paying attention to on sector trends here.
Hello again, Diane. Yeah, about an hour and a half to go in the trading day, and make no mistake, we are green across the board, but this day keeps getting more and more narrow as we get to the end of the day. Right now, despite the S&P being up 0.5%, only 3 of the 11 sectors are higher. But like you mentioned, the good news, information technology is one of them, up 1.7%. We got consumer discretionary. That's another one of the heavyweights. That's up about 0.6. And then energy is up. And as you know, crude oil futures are hanging by a thread to be up on the day even. So this is a market that's still positive. The S&P's up 0.5%, but the equal weight is only up 0.2%. So it's a very narrow rally. But the good news is 2 of the sectors that are higher are the heavyweights, consumer discretionary and information technology, but it feels a little shaky, Diane.
Indeed, it does. As you mentioned, it's getting more and more narrow throughout today's session. We'll see how we head into the close, especially that last half hour, which we often know tells the real tale. That's our Kevin Hinks over at the CBOE. Time now for our ETF watch list segment. Joining me now is Alec Boconfuso, portfolio manager of Gold's ETF Gabelli Funds. It is good to see you this afternoon. So this is a big week for sports, big time period for sports. The World Cup stage being set here in our neck of the woods, especially. I see all the signs about being careful, preparing for traffic, but we're preparing for a big business economic infusion here in the U.S., especially over in our neck of the woods. For people who don't follow soccer closely, talk to us about the inflection point this is for modern soccer.
Sure. Thanks for having me today. Really appreciate having me on. So yeah, soccer, here in the U.S. has not historically been the #1 sport. Obviously, we have the NFL, baseball, NBA. Soccer's come a long way since 1994 when we last hosted the World Cup. The MLS actually didn't exist in '94, and now you look 2 years later after that, the MLS came out, and now 30 years later, we have 5 teams worth over $1 billion in the MLS alone. Lionel Messi's the face of soccer here. And we're about to host the biggest World Cup on record, 48 teams. That's up from 32 last time around. There'll be 104 matches across U.S., Canada, and Mexico. So we think this is just going to be a huge, huge tailwind for viewership of soccer in the U.S. And we think those eyeballs will follow back the top players back to Europe, where the top clubs are in the world.
Alec, so you think this could create a permanent boost to popularity? For instance, I asked this question because my son is a heavy soccer player, just did an international tournament. The U.S. teams compared to Brazil, to Portugal, etc., paled in comparison. What signs are you watching to see momentum in North America?
Sure. So, you look back when I was growing up, I was asked why I didn't play, football. I chose soccer. That question I don't think is getting asked anymore, like you said with your kid. However, Team USA is, not on the level of Brazil or Argentina or France or Spain just yet. I think if, we have a successful tournament with the guys we have, you look at the starting lineup, you have Weston McKennie from Juventus playing. They're one of the best players, is starting on the best Italian team. Historically, you have Tyler Adams playing for Bournemouth, which is owned by Kanai, which is in one of our holdings. So we have some of the best players in the world actually now, playing for the top teams on Team USA. We'll see if it can click this time around. But even if it doesn't, just the magnitude of having these great players play for, Team USA versus what we had years ago, I don't think many players were actually, playing in the Premier League or Italy or Spain. They're all playing the MLS, historically. So I think we can have not a deep run. Hopefully we do, but if we go decently far, I think the young generation here, we'll have players to look up to and, watch them, play for, the big teams in Europe. I think will go a long way.
Alec, let me ask you this. Tell me a little bit more about your ETF goals, GOLS, what we're gaining exposure to there.
Sure. So, as you said, goals, nice ticker, for scoring goals, obviously. But we have exposure to 15 publicly traded soccer teams globally. So our top one is Manchester United, followed by Borussia Dortmund in Germany. We have Juventus. We have FC Copenhagen. We actually have Club America through Olamani, which is hosting the opening match in Estadio Azteca this Thursday in Mexico. So you get 15 of the greatest teams in the world, including Benfica. I can keep going on and on. But again, we think this tournament, especially with some of the top players, you look at Manchester United has 13 of their players playing in the World Cup. So again, there's so many touch points for consumers to follow these players back to their home club, and we think that will boost engagement, boost viewership, boost commercial sales for these teams globally.
Alec, let me ask you this. For the retail investor who is curious about gaining exposure to potential growth in here, what's the long-term investment thesis? Do you see more runway than, just, for instance, this year's World Cup? Because obviously there's a lot of fanfare around it. We're getting ready here. There is expected to be an economic infusion. But what's the long-term view?
Look, you look at the last 10 years, I think the top 10, 15 clubs in Europe, the CAGR of their enterprise value has grown at over 10%. That's on par with the S&P. That's just the historic backdrop is very strong. We think as more eyeballs, in the U.S. obviously, but even outside the U.S., continue to look at soccer, specifically, broadcasting rights and renewals are coming up globally for some of the biggest leagues, and we keep seeing those go up and up, and that actually impacts the top line of these clubs, and all these clubs trade on revenue multiples. So that, we think is the tailwind. Will keep going. We think the World Cup is just one part of the thesis. It's not the thesis as a whole, so it's just one extra, touch point for global growth of soccer. And we're super excited. It's a blessing to have it here in the U.S. And I'm very excited to see how it helps grow. Street soccer. Hopefully, we'll see some players, in the streets instead of just basketball in the streets of New York. And hopefully that just highlights how strong this sport is globally, and we'll see it happen here.
Big season for that as well right now. But my son did do a pickup soccer game yesterday, which you don't often see. You see pickup basketball regularly. So thank you, Alec. That's Alec Boconfuso. He's a portfolio manager of goals ETF over at Gabelli Funds. Again, big season for sports and business right now with the NBA Finals, World Cup coming up. Coming up, we'll take a closer look at some of the large options trades to watch in the market. Rick Ducat will join us with a closer look at big moves for Corning, Johnson & Johnson, and 3M. The watch list will be right back.
To the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch. It's time now for Big Moves, where we highlight outsized option trades taking place in the market. Joining us now for that is Rick Ducat, our lead market technician. We've been watching Corning throughout today off the back of a partnership with Amazon announced earlier today. You're seeing shares of Corning move higher off the back of this, up about 6.5%. This is a multi-year, multi-billion-dollar agreement. You found a big move today. What stood out in the options market?
Yeah, so optical communications, displays, all these materials, fiber optics, increasingly becoming a big part of the whole data center ecosystem for artificial intelligence. So that's putting Corning more at the forefront of this particular burgeoning field. So the trading question was a short put sale, so neutral to bullish outlook here, minus 3,870, September 18th, 150 strike puts at a 1272 credit here. So this equates to a pretty large credit, $4.92 million credit received. Max loss, if it were to go to zero, $53.1 million here. So this one, was interesting to me because there's a pretty large cushion to the downside here. The break even comes in at 137.28, which is about 27% to the downside. Even so, the expected move for this 102-day time horizon does come out to more than 35%. So it is still within the realm of possibilities here, but quite a haircut it would have to be to get down to that point here. The trade volume here was about 5.8% of the day's total options volume at the time I checked here. The sizzle, the activity relative to the 5-day moving average of options volume, came in at 1.5, so elevated activity.
All right, let's talk Johnson & Johnson. Those shares not moving much right now, but it's up more than 10% so far this year. Earlier today, the company announced it agreed to acquire the biotech company Firefly for $1 billion in cash. What trade stood out in today's session?
Yeah, looking to expand their cancer drug pipeline is what it seemed like with this particular acquisition. So this trade, though, is thinking for, you might see some downside in the coming months here. Plus 5,000, October 16th, 210 strike puts at a 479 average debit. So this was done in 2 lots here. So that's why we have that average debit paid. A bearish trade, even longer than our last one, 130 days out. Max loss, our debit paid $2.39 million. That would be if, this were to go up in smoke. Max profit, $102.6 million if it were to go to zero. So this one, once again, the break even, 205.21, 11% to the downside. The expected move is only about 12%, though. So it would need a bigger than expected move, to kind of just be right around that point where we'd be breaking even with this trade. 26% of the day's total volume here was this 5,000 lot trade, but the sizzle was only
3 minutes to power hour. Uh-oh. Sure enough.
Where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, we would become.
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Marley. And I'm Sam Bidas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on the show today. We'll break down the fallout from last Friday's sell-out or sell-off and what it could indicate about the direction of the market moving forward. Then we'll be joined by the CFO of DocuSign to discuss the company's first quarter results and its implementation of AI in its software. And we'll break down the keynote from Apple's 2026 WWDC following the company's latest developers conference with Tim Cook as the CEO. But for now, Marley, walk us through what's been on your radar today.
Of course, Apple, like you just mentioned, on everyone's radar today with the kickoff of its Worldwide Developers Conference. All we've gotten so far is Tim Cook's last keynote as CEO of the company. He highlighted the newly rebuilt and redesigned Siri AI alongside a new operating system called Golden Gate. Of course, we'll break down more of the releases there and then have some more discussion later on in this show, as this will be ongoing throughout the week. Also, Marvell shares soaring today as it will join the S&P 500 on June 22nd. The semiconductor company was recently described by Jensen Huang as the next trillion-dollar company, and it will replace Campbell's company on the index. And Eli Lilly popping as well after disclosing its latest experimental weight loss drug testing results. A late-stage trial showed that its next-gen medication, retatrutide, is effective in both offering substantial weight loss as well as in alleviating obesity-linked conditions like osteoarthritis and sleep apnea. We'll take a closer look at those results shortly. There's another medication that had some successful results as well. But before we get to that and more, let's check in with the markets as we near the end of the trading day here. Slightly different picture than we had earlier year to date, the Dow has turned into negative, but we are maintaining our gains across our other 3 indices. The S&P is still up about 0.5% at 7419.47. On the Nasdaq, we're 1.8% higher, 29,481. The Dow just fractionally in negative territory, about 17 points now off. We're at 50,849, and the Russell 2K up about 1% at 2861.52. As we take a look at some of our futures products, the 10-year ticking higher. We're at 456. The dollar is at 100 even. Gold at 43.60.20 a troy ounce now. Crude oil at 91.21. We've fallen off those highs that we saw on the escalation fears, but still firmly above the $90 mark. And Bitcoin is at 63,555, below the levels it had seen after it broke out of that previous trading range for the crypto. We are back firmly in its previous trading range from weeks ago, back in April. Do you want to check in with Sam, though, and see what's sticking out to her on the day as we kicked off a new trading week here? Sam?
Well, as you said, Marley, oil coming off the highs today on some of those positive Iran headlines this morning. President Trump saying Iran and Israel are looking for an immediate ceasefire, helping ease some of those concerns. At the start of the session, that the two sides traded strikes at the weekend, and that appears to be helping stocks, even though yields remain sticky going into this week's inflation print. Investors are also scooping up chip stocks again, mostly notably Intel and Micron, both double-digit gains today. Intel shares rallying the most in a month after a report that Google will tap the company for making its TPUs as TSMC struggles to keep up with its demand for its capacity. Micron's on the receiving end of yet another batch of price target hikes. Wells Fargo took it to $12.20 from $5.50. Cantor went to $1,500 from $700, calling out continued demand. SanDisk also rallying after some more analyst love there as well. Cantor taking the stock to $2,900 from $1,800. Mizuho now at $2,200 from $1,825. But tech is still bifurcated today. We still see software stocks under some pressure. Microsoft, Salesforce, Adobe, CrowdStrike, and Palo Alto have all been low. So we'll continue to monitor that throughout the course of the rest of the show as we approach this closing bell for today. But Marley, I'll send things back over to you and Jenny Horn in Chicago with some of today's top news.
Thanks so much, Sam. Like you mentioned, Jenny Horn, co-host of Next Gen Investing, here with us to take a look at some of these top movers. We'll start with Apple, of course, amid the Worldwide Developer Conference kickoff. We saw them hit a new 52-week high earlier. They've since given up those gains. We are actually at slightly negative territory as I just look here, down about 0.8%. But take us through Tim Cook's last keynote and what the focus was, as I know it was heavily about Siri and AI.
Yes, that is exactly where we'll start. And so we're finally seeing more of a focus for the company to go all in on AI. I know that that's been a narrative that's been somewhat back and forth for years, but the Siri overhaul is really the centerpiece here. They did unveil this fully rebuilt Siri AI with more conversational chatbot capabilities. They can understand the on-screen context, basically then pulling from like messages, photos, and execute then multi-step actions without you having to be as involved as the user. But this new dedicated Siri app will have conversation history and cross-device continuity, but also will be integrated, of course, across their ecosystem. But they're also leaning on more of this external AI push with like Google Gemini. As we did see, Siri AI and Apple Intelligence are still much powered in part by Google's Gemini models. And AI is really being pushed across their entire ecosystem. Apple Intelligence is now very much deeply embedded across their OS and app systems. The new capabilities include things like natural language actions, AI in photos with editing and object removal, and context-aware suggestions in messages and apps. But iOS 27 and the platform updates also did focus more on like performance-based from AI. And so they did note that things like performance gains, like photos will load 70% faster, AirDrop will be 80% faster. There's more broad really capability, which includes actually some of their older models, and the continued evolution of that liquid glass with more user control and readable tweaks. And so they're stepping back from some of these pretty aggressive design changes after some mixed feedback. But I really thought the takeaway here was this was not really a hardware update. It was mostly software, as the keynote was overwhelmingly software focused with no major product launches. So it just depends on how, I guess, you want to read that, because I think this is what those that were skeptical on their AI presence have been wanting for quite some time. I do think, though, there's an execution problem here. So we've been waiting for Siri for years. I mean, it's been about now a year. So I think that finally getting some details, yes, was critical, but it does also remind us that it took us a while to get here.
Yeah, I think the initial commentary about Siri updates or rebuilds started in 2024. So it definitely took us a while to get here. Maybe time for me to update my iPhone 13, but that's...
I was going to say that you are probably the one that needs to get a new phone the most. My own personal just loyalty to the ecosystem, I need you to update.
I'm probably overdue, but Apple moving a little bit lower right now. We're down about 1% even for Apple right now. But the conference, of course, going on all week, so we'll keep talking about it throughout the week. But I want to move on to Corning, having a really nice pop today. They're up more than 6% on this new deal with Amazon. It's a multi-billion-dollar agreement. That's all the financial details we got, but one in a series of many with big names for this company.
It is, and actually funny because for so long you only ever closely linked this name to Apple because it was really, its bread and butter, making of course the glasses for iPhones with like the glass screen basically. But with now some better partnerships, or not better, but substantial partnerships to that, Amazon and Corning announcing this multi-year, multi-billion-dollar agreement Monday to produce optical fiber for data centers. And so as part of this deal, Amazon will make investments to expand Corning's manufacturing sites across North Carolina and create roughly 1,000 jobs. But the efforts are designed to strengthen the U.S. supply chain for fiber, cable, as well as other connectivity solutions that are part of Amazon's broader data center build. But the two companies will also be working to expand Corning's training program, today said to increase this talent pool and more of these high-paying technical roles. The other makers of optical networking hardware, though, also got a lift on this news. Coherent jumped, Lumentum was higher, then since pulled back. But it does come just months after Corning unveiled another major multi-year agreement worth roughly $6 billion to build data centers for Meta. And so Corning did agree to add capacity to its manufacturing facility in North Carolina to expand its footprint across the state. But the location also makes sense for Amazon, which already has its hand in some of the data center campus in like rural Richmond County, North Carolina. And so it makes sense to both of these companies, but I think it just further solidifies Corning as now being more multifaceted and showing really what fiber optics are serving this very critical need right now, beyond just being that true like glass maker. I think it's been fascinating to see the way they've really reshaped their market perception and what their technology can do, because frankly for data center builds that's so critical right now.
Well, and it really shows in their price action too. I mean, their shares have more than doubled so far this year, up I think about 6-fold since the end of 2023 for Corning. So really impressive moves, as they are not just the glass maker for iPhones now.
Yeah, they have been in a bit more of the right now critical things which are tied to everything.
They're into it.
Yes, an infrastructure play here, but let's jump to Marvell because they are up more than 11% after announcing their inclusion in the S&P.
Which honestly was a reminder that they weren't already in it, which to me was maybe the most shocking thing. But I mean, rising as investors are clearly responding well to news that it will be joining the S&P 500 as well as the electronics manufacturer Flex. That will occur on June 22nd as part of the quarterly rebalancing. But this does tend to be a boost to stocks because of the passive index funds that track the benchmark gauge that are legally required, of course, to load up on member shares. But Flex shares had risen, I mean, a whopping 150% this year as well, due in part to the construction of data centers. Marvell obviously more tied to more things, memory and storage, but the two stocks will be replacing Campbell's as well as Pool in the S&P 500. But many of us have been saying from some of the notes I've read that the timing of this is interesting because it follows one of the most volatile weeks in the company's history. We had NVIDIA CEO Jensen Huang publicly describing Marvell as the next trillion-dollar company during an appearance alongside Marvell CEO Matt Murphy. And then the stock posted its biggest one-day gain ever, briefly touching this high Wednesday. And then 3 days later, we saw shares plunge more than 16% as broadly semiconductor stocks had their worst day since about 2020. So Marvell is volatile. I think a good reminder of the volatile nature of right now being so lacking of like depth in the tech trade. But I mean, like, look at that yearly chart. It is hard to find anything to dislike about a stock that has risen 254% this year.
Yeah, I mean, just in the last 5 years.
For you, the new Lord, spy.
There's not a lot of argument to be made about the skyrocketing nature of Marvell's chart. But another name had a 52-week high today.
Please.
Eli Lilly. They had some results on a next-gen weight loss drug they're working on.
Yeah, and I just think this space is so fascinating. As I always say, we have like a personal interest in some of the ways that these medications are offering to treat so many different conditions. I find amazing. So they are higher today after the late-stage trial of the next-generation weight loss drug did impress overall. At the American Diabetes Association,
countering with love.
The phase 3 trial of their retatrutide resulted in weight loss of about 28% in 80 weeks at its highest dose. even on the lowest dose, the drug saw an average weight loss of 19%. And so it was also associated with improvements in like osteoarthritis pain, moderate to severe obstruction sleep apnea, and type 2 diabetes. And at the highest dose, this percentage effectiveness would be a higher percent than Zepbound,
Ladies
which
and
is also
gentlemen,
one of Eli Lilly's flagship drugs, with a modest trade-off in tolerability. And so JP Morgan made note to see the company pulling even further ahead of the competition for this reason. Analysts at Citi also were similarly impressed with the low-dose version specifically, saying this 4 milligram dose efficacy data for retatrutide are compelling enough that the first-line positioning cannot be dismissed, which is a read that goes beyond just the street view and frames now this treatment as really the next step for patients who've exhausted, say, things like tirzepatide's effectiveness. And so they did also highlight that what they thought were real-world signals of
winning fake sell in there, fake buy,
as part of right now a quarter to a third of patients who are no longer losing weight, which is not something abnormal for any like basically appetite suppressant, but it's starting to be now a concern of like how do you basically keep these loyal customers and keep that rate just relatively high. And so I thought that was an interesting thing I hadn't really thought about before, but they did also say that this could only even further diversify their ecosystem. Like Foundayo has also been very successful to Eli Lilly. So basically just more strength in the broader weight loss as well as diabetes market. And I was also reading there's expected
you just call her broad?
Menopausal women. I mean, some of the benefits are just really wonderful to read about beyond just weight loss.
She's called you broad, Marley.
Late-stage results for Foundayo checking in menopausal women, and they're seeing weight loss findings there too.
No, you're not a woman, you're a broad.
In that space, but very interesting you brought up Wegovy, because Wegovy also came out
with
some of its own milestones, major milestones, top 3 million prescriptions here in the U.S. since its release in early January. That's the equivalent to 1 new prescription every 5 seconds, according to Novo. That was the data. It makes this one of the biggest U.S. pharmaceutical launches in history. That got released just within a couple-hour time frame of these details from Eli Lilly and these data results. And we saw Novo down about 4%, and we saw Lilly up about 4%.
Good job, Ginny, you
trading
won.
throughout the day. Lilly's given back some of those gains, but Novo holding on to its decline. So interesting what that says about investor sentiment here and whose pipeline may have more.
We know who's in charge.
Especially because if we really have this demand as much as like a
good job, Ginny.
Every few minutes, so you would say that they could both be mutually beneficial from like an unprecedented desire for these medications. And I guess it does speak to, like, we've heard from CEOs, we've heard from other companies that are in like the food space. It's changing the way that they're even thinking about like serving us as consumers. And I've always kind of been a pushback on that, because how big is this market? Apparently, it's much bigger than even I realized, because when you hear stats like that, it's astounding the mass appeal that these weight loss drugs have.
Yes, 1 new prescription every 5 seconds for the Wegovy pill.
Maybe it is reshaping the grocery store.
So we shall see. But Jenny, really appreciate you breaking all of that down for us today. Some of our top movers.
She showed you who's boss.
Next Gen Investing. I do want to check back in with Sam, though, for a look at what we have coming up next in the show.
Oh.
Well, Marley, we're going to break down what we learned from last Friday's sell-off and what it could indicate about the market's direction.
2:15, 3:15 Eastern Time. Market selling off. Ceasefire at risk.
You know the market moves, and Schwab is here to help you move with it. So, whether you're
540.
buying, selling, holding, or planning, whether you're ETF,
I'm wondering when's the
401k,
time.
saving, spending,
I thought it was right
or
here, but
even
it didn't turn
retiring,
out to be.
You can count on Schwab for market insights, live support,
This one looks a
powerful
little
trading
bit better.
platforms, and 400 branches, all at your service, all so you can invest
620.
your way. Sounds nice, right?
That's about where it was
I'm
up
Nicole
here.
Petalides, live at the New York
Nicole.
Stock Exchange,
Wow.
and this is the Watch List.
Woo.
Your midday
Let's
view
go.
into the trends driving the markets, with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Don't cut it.
Sometimes you know.
No. Oh. Oh,
You
shit.
could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
real-time access.
That was not a good idea.
Analysis. From U.S. equities to global macro matters, Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with
Well, that was a
Schwab
good
where
question.
there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Damn, he must have left a ton of money.
Welcome back to Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's take a look at these markets. Rebounding today off the back of the Friday slump. We had the S&P 500 snapping that 9-week rally as we saw a pullback in tech stocks.
How much money he might have left.
Unwind. We saw more of that unraveling today in Asia and Europe, but we're on firmer footing today as investors look like they're stepping in and picking up these chip stocks once again. But tech still looking a little bit bifurcated as we do continue to see some softness in software. So it's not all off to the races here, but it is helping the NASDAQ 100 power ahead to the tune of 1.5%
Can
here.
you
Because
have it
remember
for
that
$5,
the NASDAQ
please?
composite had its worst day back in April of last year around the
7410s.
sort of tantrum in the markets. And so the Dow Jones is losing some steam here. In fact,
$5.
off the session's highs for these markets. The Dow Jones
I think it'd be a
was
good
up about 300
idea.
points at one point. It's down about 50 points right now. The Russell 2000 still keeping its head above water, and it does come as, of course, we have seen oil coming off those
Sammy?
highs. Yields.
Can you tell it to go down to $5, please? Oh! Uh-oh! Almost. Sammy, it was almost there. I thought I had it. Yeah.
Through for the rest of the year. But crude oil, as I mentioned, $91 a barrel. US dollars firmed up here. As you can see, we're at the 100 level for the Dixie. That is pressuring.
If I ask for 510, it'll give it to me, and then it'll go to 5.
Now. Bitcoin is well bid today off the back of that slump we
I know
saw. It was south of 60K over the weekend. In fact, taking us back to the October 2024 low, we're up 5% right now, and the 10 years I mentioned yielding at 5.4. Don't mean to scare you there, 56 at this stage. All right. Let's bring Marley back into the conversation.
Marley,
last
5.
Friday's sell-off and what we're seeing in these markets for us.
$5.
Trading week with Paul Schatz, who's the President and Chief Investment Officer over at Heritage Capital. Paul, what do you make of these markets right now?
I love them.
Good to be with you. Look, it was quiet for a long time.
I love them. $5. The 7410s are now at 610.
Almost every week in April.
Yes.
Almost every week in May. So we finally got a dose of reality. But let me say this. The plunge on Friday was on good news. We're in that regime where good news is bad news in the markets.
That's not true.
Those are usually short-lived declines. The ones investors get hurt the most on is when bad news leads to plummeting bond yields. And we have the opposite. I mean, the economy just continues. It surprises to the upside. It exceeds expectations. You can describe it any way you want, but I feel like every month economists lower the expectations, and then the economy exceeds it, and then we get this dose of reality in the bond market, and then we get a couple day sell-off in it.
Liar.
And Paul, as you look at this, we're selling off on positive economic data, so we've got good news is bad news. But it kind of seems like bad news isn't all that bad because, we look at some of these geopolitical headlines that have come across and we've basically just breezed past them as if they weren't even there.
Bad news
like
is great news.
It's disappeared. How are you looking at that component of the setup? Not just not trading historically as we normally do on good data, but also not reacting to the bad news as well.
Exactly.
I think you have to be really careful with how you label what kind of news. This is not a new comment for me. I've said it for years. I'm 38 years in business. I've said it for probably 30 years.
How old are you?
It's almost impossible. At least
You're
I
58?
do it. I can't manage portfolios based on geopolitical news.
You're still a
I
kid.
feel like it's a sucker's game to do so.
Wow.
So bad news on some headline with Iran or the Middle East, to me, that story was already played. It is markets.
It's old news.
Well, when they get a shock. When
We've seen days a whole lot worse.
Like this, markets have to adapt and adjust like the Marines, and over time, so a 5% interest rate in all.
I never used that scenario, but we've seen days a whole lot worse. This guy agrees with me.
The beginning when oil spiked to 119 overnight. Oil can go back to 119 as long as it's in stair-step fashion.
Finally, someone agrees with me.
So I kind of separate the geopolitical noise and nonsense from reality because, frankly,
we have a problem over here.
When I boil it down to some clients, I ask them, does it really matter?
We have a problem.
For the price of oil skyrocketing.
We have a problem.
What happens in the Middle East when we're talking about record profit margins, record earnings, this whole new story about AI, which is still only in the first, maybe second quarter. And I say, no, it doesn't.
Right, and so Jensen Huang, the CEO of NVIDIA, saying
So Jensen Huang to
he's
stick
not
up
really
his
worried
wangy.
about the global unwind that we saw. I mean, he sees it as a buying opportunity, and here we are on a Monday, fresh trading week. We've got the dip buyers stepping in and scooping up all those big chip stocks that we saw on Friday. So it was an interesting exercise that we saw last week because it proved that there is a trade outside of AI. It wasn't a full sell-off, it was a rotation into value. So what are you hearing from those clients right now, Paul? What are you telling them? Because no one wants to be on the wrong side of this trade right now, but what are they thinking about as far as some of that hedging and that diversification?
Drink your coffee. Which one?
So clients rarely ask those kinds of
Panic
questions.
attack.
I wrote about something this morning where I said, on Friday, you had everybody knows, you had a record amount of put buying. So people were loading up the cart
It's
for
like
lower
$200.
prices. You had a spike in volume in the triple Qs, which normally tells you you've got some panic. But interestingly, right? Staples, utilities, REITs, healthcare all rallied. It wasn't throw the baby out with the bathwater kind of day.
No, it's something like that. A lot worse.
You look at credit, which is this kind of opaque land where you just compare basically.
Should I add two more?
Treasury bonds. You didn't see this run to treasuries at the expense of junk bonds. You saw, and you guys may not be old enough to remember this, but this felt like a Brexit kind of decline where it's a short-lived thing. People overreacted. I think they're going to look back in a couple of days or weeks and say, holy geez, we hit the button and sold too quickly. We shouldn't have. I don't love the action today, frankly. I'm looking at tech and it was much stronger before and it's waning into the close. Not exactly warm and fuzzy, but Friday declines in bull markets, when you get a magnitude like we saw Friday, those kind of declines, you typically see a strong bounce in the coming day or two. It begins in the coming day or two, and it has some legs to it. So I'm going to be a buyer into any more weakness. I'm a little scared of the chip stocks. I'm going to wait and take a wait. And I've got Intel and NVIDIA, and that's probably it. And I'm unlikely to add to that.
Well, I'm going to add some chip sauce right here.
You look at Friday and other days. Friday, pull out AI, the S&P is almost flat. You take another day where AI is rocking, and
this ain't right.
All AI and no S&P. It's this either-or market, my friend Helene Meiser likes to call it.
$2.50 a tip sauce?
I really do.
So after the washout we saw Friday, you said you anticipate a rebound coming here, but Paul, how much does the quality of this rally matter here? And if we get it, does it change your thesis at all for the correction that you expect in Q3? Does it push it further down the road?
It matters a lot. Thanks for asking it that way.
That was a good question, baby.
Not all rallies aren't all the same. What you want to see is participation. It's okay that a handful of stocks are leading day after day, week after week, etc. That's okay, but you can't let. So this is not 1999. I can promise it's not. This is not what happened in 99. 99, we had a group of stocks. Everything else didn't go sideways. They actually went down into it. This is not 99 yet. And if it is, we're only in the end of 97 or 98. The quality of the rally, what we want to see is we don't need this wide, incredible broadening like you see at the beginning of a bull market, but you still need, materials. And look, banks are firming up. They're trading a lot better than they did, but you need banks and you need transports and materials and industrials. You need them to at least have a bid, meaning you need them to at least get dragged up with AI. So people get a little too crazy when they talk it, there's 10 stocks and that's it. Other things are rallying. If we get a rally into July 4th-ish, as I'm making up a date because it's easy to remember, and it's only at 10 or 15 or 20 stocks, and other stocks are all going down, that would tell me there's a larger decline coming in July and August. But if we get more participation the rest of this month, then I think we may forestall a larger decline for the time being.
Yeah, some have been talking about a pullback over the summer into a Q4, which could take off once again, particularly as you continue to hear the brokerages upping their ear and targets. I mean, Citi just took it to, what, 8,100 today as well. So, as we know, Paul, rallies aren't linear. But thank you so much for joining us. Really appreciate your time as always. Paul Schatz there, President and Chief Investment Officer over at Heritage Capital. Coming up next, we'll be joined by the CFO of DocuSign to discuss the company's first quarter results and how it is implementing AI in its software. Market on Close will be right back.
Did
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Crocs is rallying to a new 52-week high today after Baird upgraded shares to outperform from neutral. The firm also raised its price target on the footwear maker to $150, up from $115, citing a higher degree of confidence that positive inflections for Crocs North America and Hey Dude look sustainable. Baird says Crocs returned to positive low single-digit total revenue growth during the second half of the year. Tight cost control and cash return prospects support a healthy upward bias to consensus estimates. Let's see how some of these names in the footwear group are faring today. Whatever my feelings may be about the fashion of Crocs shoes, it's a good day for investors, trading up more than 2% higher on the day for Crocs. Decker's brand up about 1%3/4. On holding slightly lower, down about 0.5%, but Nike having a nice day as well, up almost 0.9%. I do want to bring Sam back into the conversation and shift gears here. Turn our attention to DocuSign's recent earnings and welcoming their CFO, Blake Grayson, joining us today. Blake, great to have you on the show. Now, we got your results. You beat on the top and the bottom line. You raised your full-year revenue guide. Take us through what you think were the highlights of the quarter.
Thanks, and thanks for having me.
Tempting to get out right now.
For us. I'm really excited about it. I think, DocuSign, like you said, we beat across all of the guided metrics that we report on the top side. In revenue, Q1 revenue up 9% year over year. We delivered free cash flow yield of 35%. So we generated around $289 million of free cash flow, which enabled us to actually do the largest quarterly buyback in our company's history at $318 million. And
Right here.
you know, that's a big part of that is driven by the continued rollout and adoption of our new Intelligent Agreement Management, or IAM platform, with approximately 40,000 customers now using that platform. It represented about 12.6% of our annualized company's annualized recurring revenue. And we reiterated our guidance for the full year about accelerating our total company ARR this year. So really solid quarter. Really proud of the team for everything that we've done.
Yeah, I just want to take it one step back here because, when people think of DocuSign, they do think of that e-signature company that very much benefited back in the COVID days. We all used it. And they're all just wondering, wow, how did you get those numbers? And as you say, you put it down to this Intelligent Agreement Management, or the IAM platform with the enterprise. I'm just wondering if you could explain to us what productivity our companies, our enterprises seeing from that compared to perhaps, say, before? And what are your enterprise customers seeing compared to, say, an individual like Molly and myself?
Sure. So yeah, it's DocuSign's got an amazing history. Most adults around the world have heard of it. We have a very large book of business and portfolio customers reaching almost 1.9 million customers. With IAM in particular, there's studies out there by companies like Deloitte saying that if a company uses an end-to-end platform, uses AI for an end-to-end platform, they can see ROIs up to 30%. We have specific examples with customers like Experian, Market, that's an online grocery platform, where they're seeing rapid turnarounds as far as how contracts and workflows are used, and regarding like the insights that they can have as well, and across places even like wealth management around new customer sign-ons, right? Pre-filling forms in that workflow. And you can imagine signing up a new customer for any business, small business, is probably arguably one of the most important moments in a company's history. And for us, we help that speed it up. We help that conversion. And so we're seeing the early fruits of that, 12.6% of our ARR. It's just a whole different suite of features and products and services that go beyond e-signature. But IAM is all wrapped in and it includes e-signature. So companies that kind of rely on DocuSign for the trust, security, and compliance that frankly is more critical than ever these days. And then on top of that, they can create a system of record for all of their agreements across their entire organization. It's a pretty compelling argument.
401 is
the sort of the obvious question in the market reaction as well. The numbers spoke for themselves, but some felt that the guidance was a little bit on the cautious side, despite it being a slight raise here. Were you just being conservative given the macro backdrop? Do you think the reaction is part of just the timing of when you happen to report and the market setup that you got? I am curious what your thoughts were on the reaction, or are you perhaps seeing some caution from customers here?
No.
Wow. How can you talk to somebody like that? Huh? That's a low blow, man.
The software in general. I think one of the most compelling arguments I can make about DocuSign is the durability of the business that we have.
Tell her to kiss your ass.
4 or 5 quarters for us. Our revenue growth has been quite consistent. Our dollar net retention has improved slightly over the past few years. And so we're making progress. I think, there's investors asking questions across software, not, DocuSign in particular, but what is that AI disruption? Possibility for us.
Exactly.
AI is an enabler. Like we are able to leverage over 200 million private agreements to be able to gain insights for our customers in a secure way to allow them to be faster and do better. And I think our results will speak for themselves over time, and that's where we're really focused on.
Yeah.
You said that your employee count was down sequentially from Q4. You're saying you're making trade-offs across your team structure to invest in growth initiatives as well. You will continue to hire across global offices here, but also lower cost locations. I wonder if you can unpack that and fold it in with the fact that on your balance sheet, which does remain strong, you sit on roughly $1 billion of cash. How are you looking to
higher
deploy
educated.
That?
Yeah, so I think from our employee resource side, one thing I would
get ready.
Highlight for investors is that DocuSign over the past few years has been very mindful about efficiency.
Get ready to squeeze,
If you look at our Q1 revenue and you compare it to where we were about 4 years ago, our revenue is up about 40%. Our headcount is down about 10%. So this is an area about growth, but doing it profitable growth and being very frugal and thoughtful about those resources. And I think we've been able to generate a lot more leverage. Our
Ladies and
non-GAAP
gentlemen,
operating margins are almost double over that same period. They're up about 15 points over that period.
I don't believe
I
you.
would say for us, we are making the trade-offs. We are looking for efficiency gains across our business in order to reinvest, particularly into the IAM platform, which we think is going to be
the IAM, I never heard of it.
Continuous innovation for us, adding value for our customers.
I'm scared.
And so we're being very thoughtful about it, but the biggest thing for us is getting ourselves
The
back to
IAM?
accelerating growth. And we're on track for that this year, as we've shown in our full year ARR guidance.
Yeah.
Blake, we really
Through
appreciate you
left
joining us
curve.
to take a closer look at your results and the action that we're seeing there. Really appreciate the time. Blake Grayson, CFO of DocuSign. Coming up next, we've got Options Corner coming your way. Rick Ducat will be joining us right here in our Chicago studio to take a look at the action on Micron after a pair of price target hikes for the memory giant. That's next on Market on Close.
They're having clothing war. Look there. What? Did anybody? Did you just see what I just saw?
You could have done better.
Did you see what I just saw? Did you see what I just seen? Exactly. I called out an inverse head and shoulders right here. This thing pulled back to $3.70. Okay? Yes. Yes, they're at 640 right now. Oh my God. We need to call an ambulance out there. It's gonna get pretty bad. Yeah, that person down there in aisle 6, about 6 seats over. This is a temporary sell-off. The market's concerned about one of my guests out there. Yeah, you got her? It's a him. Oh. Ask what pronoun it is. Okay. $3.80. Okay, prepare ye. Randy. We're coming to the right shoulder the second time. I know this could be just a fairy tale, but if it holds, boom, the next time up. Now you can get these on sale for $3, $2.85. I think this is going to be too much. Someone needs to stop it right here. Yeah. Need to stop right here. Stop right here. Okay. Okay, crowd's going wild here at the sports arena. Marley's up there with Skinny Rick.
Back here. And, memory is just really just the extreme outperformer of the semiconductor.
She probably threw a left curve at him, too.
Micron, Seagate, Western Digital, SanDisk, everything else kind of just crammed in this little area down here. The basic calculus hasn't really changed. Everyone needs a lot of memory chips. There are only so many places to get them.
I need a bounce, what I need.
As fast as they can. Even if you broke ground right this second on a new memory chip foundry, it would be like 3 to 5
Jim
years.
has a 7410s right now at $3
to just to get it going. And Micron is already working on their new facility in Boise, Idaho. They're expected to get chips rolling off the line in 2027. Still a pretty long way off for the red hot environment in which we find ourselves right now. Definitely a situation that is not even close to being resolved yet.
Yeah,
these are looking very good right now.
Run up here as we look at Micron just on its own, knowing yes, we shifted out of names like Micron last week in that full week, but it certainly has not seriously impacted the rise that we've seen over the last year.
Not mine.
It's it can feel very painful if you have these dramatic declines from the high point, if that's kind of where you got in. But you got to keep it in perspective here. We're still up a very large degree during this time frame here. So we topped out at 1089 recently here.
I'd be selling, wouldn't you, Rick?
864. So we did hold up a bit above a point that I had my eye on here, which was the old highs and the subsequent lows after a gap up near 820. So we didn't even really get to the level that looked like it was a significant supportive area a bit further to the downside. The gap also began at 780, so that gives us a zone to be on the lookout for if the decline does continue. Nevertheless, our white trend line here, starting with these lows, you could argue is still in play here. We also never really tested that area. You could couple it as well with this downward sloping trend line connecting the highs from those all-time highs that we saw there. Much steeper trend line here in blue has been broken as well. So an interruption to this very sharp push to the upside.
Gap. I see it.
Speaking,
you
the
see it,
sharper
Rick?
the move, the less sustainable it is,
right here.
and the pullback can be quite vicious even during
just
extreme bull markets here as traders readjust their positions or take profits. So now if we were to consider our moving averages that we follow here, 5-day EMA in dark blue representing 1 week comes in at 953. Meanwhile, our 21-day in teal representing a month comes in at 853.50 or so right now. So those give us a pair of kind of bookends to consider with our price activity for support and resistance here, as well as potential breakout points to the upside or the downside.
There's a lot of choppiness over here on my contracts. For right now, I'm going to go back and switch this over here to Schwab.
Bought area, that line near 70. Extreme upside momentum.
Got bull flag.
Now, even though we remain above the 50 midline, so we still have more of a bullish tilt, we have seen a fairly significant interruption to our velocity. So finally, if we were to think about our volume profile study, as with many of these kind of high-flying tech and AI adjacent names that we've seen recently, we're just focusing in on the past
$5,000 in a matter of 2 candles.
Deep look at some of these relevant areas. If we took in the whole year, it'd be kind of hard to see the recent activity. So here, we did have a smaller node that developed around 1015 to 1050.
Jim, you're even. You ever thought about selling?
Area is around where we find ourselves right now, between about 900 and 950 roughly. The largest one, close to the recent price activity, comes in between about 700 to 792. So these are kind of wide ranges, but it kind of speaks to how fast.
Okay, my eyes are starting to open wide all of a sudden.
Micron has been. It's kind of hard to catch up with everything.
And we saw a rebound from Friday's sell-off, but it wasn't just Friday for this name. I mean, it was pretty much throughout the week we saw pressure on this name. Are we still seeing some caution here when you look at the options action, or is it resumed a normal day?
No caution.
Actually, it's a little lighter today. So our sizzle, the metric we use to gauge options activity, is coming in at 0.83 versus the 5-day moving average of options volume. So about 83% of what you typically expect here. So today, that equates to about 551,000 options. So still a very hefty number. That's quite high in terms of overall trading activity.
Let's see what the sizzling's about.
57% or so were calls. Most active monthly or for open interest is June 18th, the coming front month expiration. About 20.3% of all open interest in that month quite far outpacing any of the other month in terms of a single period expiration. One notable trade was in the June 18th expiration, this coming month, plus 130, 650 strike calls at a 295.30 debit here. So a $3.83 million debit.
Come on, baby.
Not really clear if it's an opening or closing trade here, but you know,
crowd's going wild at the sports arena.
Amounts being paid for options across the board today.
Yeah, and with that nice move to the upside, more than 8% for Micron with those two price target increases. We're just north of $9.35 in terms of the stock price. I want to thank Rick Ducat, our lead market technician, for always breaking down the options action for us. And I do want to send it over to Sam to find out who she and George will be talking about for
$4.20.
Well, Marley, we're going to be talking about Voya Financial heading into the close. So George Sillis will break down the details, what you need to know coming up next on Market on Close.
The crowd doesn't know what to do right yet. Is there anybody still in my calls? Say yes or no. Nobody? You know, I tried.
Floor in the world.
It did go to $5. It still might. All we're waiting for is a peace offering. Them smoking opium pipe. Trump, they're 480. They're now at $5. You smoking oil, opium oil. Trump. We've got some good opium oil here, Trump. You try. You take opium hit, and we'll run this thing to $10. Good idea. Well, we've been hurting. We kind of put stop over there to the fentanyl drugs that we were getting over there. Where we went, Venezuela? Oh, yeah. Now I got to worry about these honkies over here. And this opium. Which is better? Randy, which one is better? I know what he'd say. None of them. That's correct. Okay, we're at 280. You were at there at 5. George. Situation here. Oh yeah, I gotta check this. Oh. You'd think today was the 8th. 1, 2, 3. Boom. George. It's not right.
First quarter results as well, and reading about a lot of the activist interest as you're talking about with respect to obviously wanting to examine perhaps a strategic review or possible sale here. But just walk us through the fundamentals, because this is
8 minutes left.
A good run of late, but what, up 20 or so % over the last 6 months or so, year to date?
It has. It's actually been a good performer. Overall, the financials, Sam, have been performing quite well, so that is certainly helping companies like Voya Financial. All the insurance companies, too, benefit with higher interest rates because as part of their contingent reserve provisions required by law, they're required to invest a portion of those in risk-free assets like Treasury. So interest rates have helped, bottom line, this business and the insurance business and the financials as well. So that's part of the move. But I do suggest that the strategic review of the business is another catalyst, which is propelling the stock higher in the last few days. But you also have to consider, too, last week was a really good week for healthcare and financial companies. Defensive and high interest rate environment is helping the financials. So that is part of the move we're seeing in Voya, but I do think that the underlying strategic review of a spinoff of their insurance business to bring cash in for share buybacks or dividends, or a full-out sale of the business is creating some institutional interest in the name.
Yeah, for sure. All right, sitting up 2.5 right now, $88 and change. George, really appreciate it as always. Thank you so much for your help today. George Siller's there. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and George for that. We are nearing the end of our market session. That means Alex Coffey will be joining us right here in our Chicago studio to break down the action we saw today. That's all next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time
reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Schwab.
Stay connected to what moves the
Well,
market.
3 months
Download the
left.
Schwab Network app and stream anytime wherever you are.
We're back with Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caden.
You can be smart these days.
Left in today's session, so let's welcome in Alex Coffey, co-host of Next Gen Investing, to help close out the day here. Alex, you say Friday's technical damage may have been more meaningful than it appeared this morning.
Ooh, low blow.
Are you saying sort of these double-digit gains we're seeing in names like Micron today, Intel are perhaps a masking an even bigger blemish that we saw at the end of last week?
That's a good question. What I would say is I think those names are expression of risk on in today's environment. So if you look at the correlation between a SanDisk or a Micron and the overall market, it's well over 0.9 over the last 3 months, yet those names trade with 5.5 times more implied volatility. So if you're just recognizing patterns and you wanted to, express buying of the dip, the bang for the buck, but also the risk, of course, is amplified in expressing it through Micron or expressing it through SanDisk. And if you look at the last several years, going back to 2023, being involved directly in these AI names, whether it was NVIDIA or
until that's Sammy, whatever you do,
perhaps a Marvell or Micron over the last several months, that has outperformed dramatically the S&P 500. So the S&P 500 has done nicely over that time, but I think expression directly in those names has been the choice for many investors. When I speak about the technical damage, I was speaking solely about the S&P 500. You saw the index break below the 5-day EMA and the 21-day EMA, which on the surface are, just indications of trend, I suppose, but one day doesn't make a trend. However, the index opened up at that 21-day EMA, and Sam, on your program earlier this morning,
3 days, does it?
We talked about the battleground of 74.50 and how that could prove to be kind of a relevant area today. And it chopped around that area for much of the morning before ultimately resolving itself below that level.
That's what I thought.
That we have on the screen has those 5-day and 21-day EMAs represented by that purple and teal line. Ooh. If the purple line were to break below the teal line, which would take another day or two of sideways or lower action, that can be indication of trend shift, particularly when the index is below both of those moving averages. Based off, and it's not reflected on this particular
50
chart,
and the 210 EMA.
You can only see 1 month of price activity, guys. These lines from the red to the yellow to the green are relevant price levels from historical data going back over the last
trick
year.
on us, huh?
And I like to set it up with sort of the traffic light. So 7,600 seems to be a pretty key resistance point near those all-time highs.
Shock.
The 7,300 zone could be a bit of a pivot point, though. So it's basically our lows of the last month, and that would be our next.
I was getting an education. He's got the 50 and the 210. A lot of traders use the 200. So is the 10 capitalized for the fake out there? Alex? You got the 2 angels showing up.
Here, he sees it as a buying opportunity. Hey, look, all these stocks are on discount now. Look at that. But obviously you've had a nice little recovery here for the stocks as well. But as you say, risk on being expressed in names like Micron and Intel today. But the S&P 500 rebounding from last week's one. So the Dow not managing to hold on to those gains we'd seen earlier in the session.
Very interesting.
Just marginally lower as we close down the session, but the S&P 500 did manage to hang in the green there. We are off the session's high, as we mentioned earlier, but still putting on 0.3%.
Okay.
405 there, so managing to hold that level at least. The Nasdaq 100.
I will catch you all later.
6% there. Remembering the Nasdaq Composite had its worst day since April 2025, which takes us back to
We've had 9 good weeks, so
type of tantrum. The Russell 2000 also coming off the highs there, but ending out 0.8% higher as some of our small caps were well bid. So let's take a look at where some of the gains, some of the strength actually came from today, because only 3 sectors actually finished in the green, which tells you a lot. Obviously, one of those technology, and of course being the leading sector today, up 2%. Discretionary was 0.5% higher.
Hey guys,
obviously, as we saw some strength coming through for our Mag 7 members. Tesla was higher by 4.5%. Nvidia was up almost 2%, but the rest were actually down. Apple taking a negative turn as WWDC got underway. Did it not deliver on its AI expectations and its promises? Is this game-changing type of series that we all wanted to hear from? Did Wall Street get its questions answered, or are no fireworks at all perhaps a good thing given the